Stocks in the Asia-Pacific slipped despite a strong handover from Wall Street. Inflation data in Japan comes in line with estimates, while investors will also be watching out for inflation data from China. The GIFT Nifty is also suggesting a muted start for the Indian market. Crude prices declined for the third straight day. Brent slips below $85 as refining infrastructure on the U.S. Gulf Coast remains relatively unscathed from Hurricane Beryl. Gold remains steady around $2,350 an ounce. Tata Motors announces price cuts for SUVs. The price of Tata Harrier has been reduced to 15 lakh rupees, while the Tata Safari will now retail at 15.5 lakh rupees. M&M also follows with price cuts, reducing the price of its top XUV 700 model to 19.49 lakh rupees. The BCCI announces that Gautam Gambhir will take over the reins as head coach of Team India. Gambhir will succeed Rahul Dravid, who steps down after a successful T20 World Cup campaign. Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines and we'll be discussing them in greater detail as well. But first up, let's take a look at the Asian markets. It was a strong handover from Wall Street. However, Asian markets are quite mixed right now. Nikkei is trading at the day's high. The Hang Seng 2 is doing well, up around 233 points. We got the Chinese inflation data, which came in lower than what the street was working with. The inflation grew 0.2% versus an expectation of 0.4%. And the Japanese wholesale inflation data is something that the street is assessing as well. But largely a mixed picture, you have to say, for the Asian markets. Shanghai is lower. We have Kospi, which is trading with cuts. So is the Taiwanese index. But Hang Seng, that is in the green, up around 233 points. If we look at the GIFT Nifty, that should come up for you on the screen, and that will indicate the move for our own markets. Absolutely flat with some negative bias right now. But remember, we did see that sharp move in the last sort of trading session yesterday. Markets closed higher. We'll have to see which way things go today for our own markets. And in the US market, Wall Street saw a mixed session that pushed Nasdaq and S&P to new record highs. The S&P edged up 4 points while the Nasdaq added over 25 points. The Dow Jones ticked down 52 points. Investors are now awaiting the June Consumer Price Index report due tomorrow, with core CPI expected to rise 3.1% YOY. Also on Friday, the June Producer Price Index data will be released, which is expected to rise 0.1% on a month-over-month basis. Speaking to the Senate Banking Committee as a part of his semi-annual address to Congress, Federal Reserve Chair Jerome Powell cautioned that keeping rates elevated for too long could stunt economic growth. Let's listen in.
The Federal Reserve remains squarely focused on our dual mandate to promote maximum employment and stable prices for the benefit of the American people. Over the past 2 years, the economy has made considerable progress toward the Fed's 2% inflation goal, and labor market conditions have cooled while remaining strong. Reflecting these developments, the risks to achieving our employment and inflation goals are coming into better balance. Recent indicators suggest that the U.S. economy continues to expand at a solid pace. Gross domestic product growth appears to have moderated in the first half of this year, following impressive strength in the second half of last year. Private domestic demand remains robust, however, with slower but still solid increases in consumer spending. We have also seen moderate growth in capital spending and a pickup in residential investment so far this year. Inflation has eased notably over the past couple of years, but remains above the Federal Open Market Committee's longer-run goal of 2%. After a lack of progress toward our 2% inflation objective in the early part of this year, the most recent monthly readings have shown modest further progress. And more good data would strengthen our confidence that inflation is moving sustainably toward 2%. We know that reducing policy restraint too soon or too much could stall or even reverse the progress that we've seen on inflation. At the same time, in light of the progress we've made both in lowering inflation and in cooling the labor market over the past 2 years, elevated inflation is not the only risk we face. Reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering adjustments to the target range for the federal funds rate, the committee will continue its practice of carefully assessing incoming data and their implications for the evolving outlook, the balance of risks, and the appropriate path of monetary policy.
Okay, all right, let's now get to the final update on our global market wrap this morning. European stocks closed lower on Tuesday as investors weighed up political uncertainty in France after Sunday's election results. The French CAC ended the day lower, over 1.5% lower, while the British FTSE slipped 0.6%. The Pan-European Stock 600 index provisionally ended the day down 0.99%. All right, that's the global market action, but how will these overnight cues impact our own markets? We have a research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. First up, Hormaz is joining in to get us all the market cues we need to watch out for today. Good morning, Hormaz.
Good morning, Sonal. And the setup has been sluggish, as has been the case over the last few trading sessions. But there have been enough and more index heavyweights that have ensured that the Nifty continues to move higher. And there was, despite the lack of participation yesterday from Reliance Industries and from HDFC Bank as well. Now, if you can see, the Nifty continued to trade in a range. Yesterday's range was around 112 points. But even then, the Nifty continued to move higher, made a new record high as well. And what will give the bulls more confidence is the fact that the Nifty ended near the highest point of the day, which was near the levels of 24,440. So that will give the bulls a lot of confidence. As I mentioned, there were enough and more positive triggers for the market yesterday. The record MF equity inflows that came in from the AMFI data yesterday, that gave a boost to the market. And there was auto, FMCG and ICICI Bank, which pulled the index higher in yesterday's trading session. The institutional flows were also positive. Both foreign and domestic investors were net buyers in yesterday's trading session. So that was another positive. The broader markets were subdued, the mid-cap and the small-cap indices, but there was plenty of stock-specific action that continued to move within the broader markets. And the high-flying stocks of the last month, which have been the railway stocks, that saw some bit of profit booking yesterday. IRFC, IRCON, they all made, RVNL also, all made new highs yesterday, but then came off very sharply and saw some bit of correction yesterday, as did the shipbuilders, all of them, Masgao Dock, Cochin Shipyard, all of these also saw some bit of correction yesterday after having a 70-80% move in the last 1 month. Some important cues to watch for today. The Nifty Bank weekly expiry today, so that will keep the index in focus. There are two listings today. The MQR Pharma listing, the IPO was subscribed almost 70 times. The Bansal Wire listing today as well, that IPO was subscribed almost 60 times. And block deals are back in focus today. That may have, we may see some in Delivery and Mankind Pharma. And the Gift Nifty is indicating a sluggish start for our own markets as well. Back to you.
Okay, all right. Thank you so much, Hormaz, for that. Let's go across to Sudarshan now. A lot of stocks on his radar today. Good morning, Sudarshan.
Morning, so we'll start with JSW Steel, which has released its quarterly update. Q1 production is lower due to planned maintenance. Total production was down 4% and India business production has come in 1% lower year on year. Adani Ports has got letter of intent to develop, operate and maintain berth number 13 at Deen Dayal Port in Gujarat. And this LOI is for a 30-year concession period and to be commissioned during FY 26-27. Infosys has bagged 5-year order from Sector Alarm, which is an affiliate of KKR. M&M has reduced price of its top XUV 700 model to rupees 19.49 lakh ex showroom Delhi. Havells has announced expansion with an investment of rupees 375 crore and will be expanding capacity of cables to 41 lakh kilometers from 33 lakh kilometers in Alwar in Rajasthan. Mankind Pharma sources a Capital Group affiliate, HEMA CIPEF, may sell 0.9% equity via block deals, and issue size for the same is rupees 763 crore and price is rupees 2061 crore, which is a discount of 2% to CMP. Delivery sources a Canada Pension Plan Investment Board may exit the company and sell 3.2% equity via block deals today, and issue size for this block deal is rupees 886 crore and offered price range is rupees 378 to 389 per share, which at a discount up to 3.5% to CMP. Delta Corp has released its Q1 earnings. Q1 is normally a weak quarter for the company. Revenue has slipped 30%, EBITDA has fallen 68%, and margin has slipped to 17% from 37% in the same quarter last year. KIMS has acquired 200-bed Queen's NRI Hospital in Vizag for rupees 75 crore, and last is RVNL, which has got order for project worth 187 crore from Maharashtra Metro Rail. So these stocks might be in focus today.
Okay, all right. Okay, all right. Thank you so much, Sudarshan, for that list. Let me go across to Mangalam. He's joining in with all the cues from the F&O space this morning. Good morning, Mangalam.
Good morning. So the Gift Nifty is indicating a flat start, but importantly, yesterday after a flat start, we built onto those gains, and the frontline indices, both the Nifty as well as the Sensex, hit a fresh record high. The interesting part about yesterday's trading session was it was led by multiple sectors. It wasn't just one sector which was weighing in. So we had the autos doing well, FMCG, ITC actually contributed a fair bit as well, and the Nifty Bank too, led by SBI, was doing well. But what we also need to know is that over the last two trading sessions, while the market has moved higher, as has the volatility, in just the last two sessions, we have the India VIX higher by almost 15%, and we do have big events lined up ahead, not only from the globe, but also our own result season, along with the big budget that we build up to on July 23rd itself. So there you have it, a 5% move yesterday, followed by a 7-8% move in the previous trading session. But FIIs and DIIs both buying in cash markets for 3 sessions in a row. That's keeping our markets afloat. And after 2 days of taking some long positions out of the system, the FIIs bought once again in index futures. So about 10,000 long contracts is what they added. And what was interesting is that they added more Nifty and they sold Nifty Bank. So of the 500 crore net buy, the Nifty purchase was 717 crores, whereas for the Nifty Bank, it was 215 crores, which was what the FII sold yesterday. And that's going to be an important index to watch out for today as well. Why? Because one, it is weekly options expiry. It's a Wednesday. And secondly, HDFC Bank is well below its 20-day moving average. So if HDFC Bank moves ahead, the Nifty Bank is something that we'll have to keep an eye out on. For the Nifty, the range continues. The 24,400 call writers are pretty active for a premium of 100 rupees. At the same time, we've seen put writing at 24,400 and 24,350, telling you that the market's base has moved higher. So what these option writers are hoping for is support around 24,300 to 24,350, which is a good 200 points higher than the earlier base, and congestion around 24,500. The Nifty put call ratio has moved closer towards 1.3. Remember, it indicates a bit of a top out near 1.4. So maybe if the Nifty was to go around that 24,400 mark, we would see an increase in the put call ratio and a concomitant increase in the congestion levels for the Nifty as well. Maruti is one stock I'll be watching out for. Yesterday saw a big move, but about 170 rupees from here, 13,000 call as the maximum open interest. So how much more upside is left on Maruti is something that we'll have to track. Balrampur Chini and IEX have entered F&O ban. Hindustan Copper is out of F&O ban. So those are another couple of stocks that we'll be watching out for today.
Okay, all right. Thank you so much, guys, for joining us. That is our Power Prep segment. But let's stay with the F&O space. Sources tell Money Control that a panel set up by market regulator SEBI is likely to come up with a number of measures to control the frenzy in the F&O space. The measures proposed may include increasing lot sizes of derivative contracts, restrictions on number of weekly options, intraday monitoring of position limits, and higher premiums closer to expiry as well. The suggestions made by the panel will be reviewed by the Secondary Market Advisory Committee before a final decision is made. We'll slip into a break now. More news and updates will follow on the other side of the short break. Stay tuned.
I think it is not euphoria. It is like a stampede in the market. Even here in Ahmedabad, whoever I am meeting who is not at all related to stock market and from different walk of life, different field, business-wise, career-wise, and everybody's talking about stock market only, that they want to trade, they want to make quick money, and they want to break their FD, and they want to. Somebody was telling me yesterday only that he's working in some IT firm and all, and he want to quit and again join stock market and all. So I think that this situation is not. Personally, I may be wrong because I have been proven wrong many times in the past. But I think this will not end well. So SEBI should take very strict action to curb this kind of frenzy in the market or stampede in the market. Now the pricing power is coming with all these telecom service providers like Jio has already increased the rates, and Bharti also has followed the suit. And same is with Vodafone. Numbers 15 players has shrunk down to only 3 players, and BSNL is 25% players, so 3.5 or whatever you call it. So, and one thing is for sure. Now, earlier we used to talk about in India roti, kapda or makan. So now this is roti, kapda, makan or mobile. As I always say that when my driver keeps 2 mobile, I keep only 1 mobile, but my driver keeps 2 mobile. So how can you go wrong in all these things in this telecom? I think now since they have started increasing the rate, and so I think best time is ahead of them.
Welcome back. You're watching Power Breakfast on CNBC TV18. Uncertainty continues for online pharmacies even close to 6 years after a plea challenging the sale of online medicines was first taken up by the Delhi High Court. Yesterday, the government told the court that it has not been able to frame a policy even after the court directed it to do so back in February 2019. Ashmit Kumar joins us now. Ashmit, this case has been going on for close to 6 years now. How has the court responded to the centre's admission?
Well, this leaves a very big grey area, especially for online pharmacies. Not enough clarity coming in either from the government or from the Delhi High Court. The Delhi High Court, of course, repeatedly prompting the centre to come out with a policy. You're right in pointing out that these petitions that were filed before the Delhi High Court were filed way back in 2018. It's 2024 now. Nearly 6 years have lapsed, and despite repeated reminders from the Apex Court, no policy decision has been taken by the government. No policy framework has been developed. In fact, very clearly in November of 2023, the High Court, in fact, had expressed its frustration by saying that, look, it's been 5 years and despite repeated requests, there is no policy action being taken by the government. Finally, in March of this year, a final opportunity was given to the centre. 4 months' time was allowed to the centre to go back to the drawing board to come out with a policy framework. Again, no decision, and that was conveyed to the Delhi High Court. The High Court now proceeding to deciding this application, which deals with the issue of whether or not to allow online sale of medicines. What is equally critical is the arrangement in the interim period. What happens until the Delhi High Court takes a decision? Is there or is there no restriction on sale of online medicines? Well, that importantly is again a disputed question. The chemists, which are the petitioners before the Delhi High Court, they argue that they cite a December 2018 order of the Delhi High Court which restricts the sale of online medicines without a valid license. And this is where, in fact, the e-pharmacies are pointing out lies the rub. The e-pharmacies are pointing out that the Delhi High Court says that online sale of medicines is not allowed without a valid license. E-pharmacies are claiming we do have a valid license, and therefore the Delhi High Court restriction order does not apply on us. So clearly more clarity is awaited. The Delhi High Court is scheduled to hear this case on the 3rd of September.
Ashmit, thank you so much for joining us with all those details. We'll keep coming back to you for more updates in this one. Let's move on. The union budget is just a few days away. My colleague spoke to the management of Azure Hospitality, Wow Momos and Chayos to understand their expectations from the upcoming budget. Listen in.
For us, a one-window policy, which basically allows us to operate and open restaurants faster. A one-window policy, which basically makes things similar in each state. And the availability of licensing done in a manner which allows our openings of restaurants and existing restaurants, renewals, to be done in a manner which is seamless. That's point one. In regard to GST, we are one of the industries that do not get input on our expenses. We've been trying to discuss this with the government, with the finance ministry, with the various different state ministers in respect to the various states and the GST council. We're hopeful, we're engaging. We want a dual policy where we can have a 5% and a 12% with input, which basically allows us to offset the expenses that we are incurring today and also allows us to spend more money on CapEx, which allows us to open more restaurants, hence more employment and more revenue for the government.
We want one nation, one regulation. Across states, compliances regulations are very, very large. LG met them yesterday and he's trying to simplify this, so hope that's a welcome move. But yeah, regulations, compliances are very, very high in this industry and we really need to avoid duplication of work. Ask from the government definitely is for GST input. Like I said, we don't get GST input, so there's duplication of taxes. We pay GST on rentals, then whatever 5% GST we take from the customer, we pay that also to the government. We don't get the input credit, which is a must for this industry because there are so many restaurateurs who are not able to meet ends, are still running in losses, and getting GST input would make them profitable overnight. At the same time, the benefit would be passed on to the consumer because see, if you are able to control inflationary measures without taking up pricing and get some kind of a positive margin by GST input, the benefit goes on to the consumer.
Our biggest demand is please give food services industry industry status because it's worthy of it given the size. Set up a separate ministry for food services industry because our challenges are extremely unique as compared to any other industry, and therefore it's all the more essential for our challenges to be dealt with effectiveness. Allow input tax credit for food services industry. because it is unnecessarily leading to double taxation for many years, and there is absolutely no pro-consumer argument for not having input tax credit. There are only pro-consumer arguments with input tax credit, not in the lack of it. And lastly, it is in the best interest of the of food services industry for it to be enabled to run 24 hours a day, and just open it up from licensing point of view.
All right, that's the word coming in from food players, food industry players, that is. We'll slip into a break. Up next, we'll get you all the cues from the commodities market, so stay tuned for that.
With July, there are a few wedding dates, but they are much lower compared to last year. So people are buying, but overall, with the gold prices that have gone up by almost 20% in the last 2-3 months, I think that volumes are taking a hit, and consumers are just waiting and watching that how does the price behave. So this is overall what we are seeing at the consumer end. So if you really look at the diamond sales, it has also been a little under pressure. The Q1 has not seen so much of a diamond sale, so the growth has been very limited in the first quarter of the financial year.
You've had your 6 MLCs now go to the Congress party. What is really happening? Because Revant Reddy himself and the Congress party was against this. They've mentioned this in their Nyay Patra. Rahul Gandhi is going to town speaking about the protection of the constitution.
Well, Revant Reddy, in fact, is on record saying कि अगर कोई आदमी दल बदलता है.
Welcome back. You're still tuned into Power Breakfast. It's time to talk commodities now. Manisha Gupta is joining us with all the update as always. Manisha, good morning. What is the commodity that you're focusing on today?
Well, thank you for that, Sonal. The markets are reacting to the Powell testimony to the bankers yesterday, where he has signaled caution over leaving interest rates too high at a level. While that has taken the US dollar index and treasury yields to the higher side, and we have seen that reaction come in for prices. But having said that, after 3% of decline in last 3 days, the crude oil prices seem to be coming back. While there is pressure because of the Hurricane Beryl making landfall in Texas as a Category 1 hurricane, Beryl also has eased without impacting oil facilities too much. The Canadian wildfires seem to be lessening, so that is also taking some premium off the prices. But the markets will watch out for the data today for crude inventories. Last week was a very sharp decline, and if you continue to see that this week, you could be looking at some price support. Also, an EIA report says that the global oil demand will outpace supply in 2025. So that premium also will build up in prices right now itself. In the metals other sector, we've seen some profit taking because of the strength in US dollar index. So whether it's copper, which was trading at a 1-month highs, has seen a decline, while copper is still 5% up in July. We also have seen some decline come in for steel, iron ore. The gold and silver prices also are off highs because of dollar strength right now.
Okay, all right. So that's what's happening with the commodity space because of Fed Chair Jerome Powell's testimony to the Congress. Thank you so much, Manisha, for getting us all those details. Let's talk about sports now. The BCCI Secretary Jay Shah announced the appointment of Gautam Gambhir as the Indian cricket team's head coach last evening. The announcement came via a tweet from BCCI Secretary Jay Shah's X handle. Reacting to his appointment, Gautam Gambhir, via a post on X, said, "India is my identity and serving my country has been the greatest privilege of my life. I'm honoured to be back wearing a different hat." Gambhir is expected to assume duties for India's tour of Sri Lanka that gets underway later this month. And less than 3 weeks to go for the Paris Olympics, the Indian contingent will be looking to better its medal tally of 7 from the Tokyo Olympics, which was its biggest haul in a single edition. All eyes would, however, be on javelin superstar Neeraj Chopra, as he hopes to become the first Indian to win 2 Olympic gold medals. Matthew Thomas gets us more on the rise and rise of the superstar.
India's best athletes have their sights set on gold as they head to Paris. And one of these stars who has already had his taste of Olympic gold is javelin throw ace Neeraj Chopra. And there's no doubt that he's looking for more in these games. India's first Olympic gold medalist in track and field, he's the man with a rocket for a right arm, and he's won every major honour a javelin thrower possibly can, beginning with his historic gold in the Tokyo Olympics 2021. His place in the Indian Olympic squad was sealed with an 88.7-meter throw in August 2023 at the World Athletic Championships. That's higher than his gold medal-winning throw in Japan. Consistent excellence was the 26-year-old's modus operandi before his historic feat, and that has only amplified since the spotlight was thrust on him. In the last 3 years, he has won a series of first and second place finishes, including a second gold at the Asian Games in 2023. As he heads to Paris, Chopra is looking to add to this medal tally and book another slot in the history books as India's first two-time Olympic gold medalist outside a team sport.
Okay, that's all we hope and pray for, right? That India does really well, better than what they did at Tokyo Olympics. But with that, we'll take your leave on this edition of Power Breakfast. Bazaar Morning Call comes up next.
तो उसको पत्थरों से कत्ल करो, पत्थर से मार मार के कत्ल करो. तो अभी पता नहीं कौन पत्थर मारेगा, किसकी कत्ल होगी, बट एक बात तो साफ है, जो अपने आप को संविधान के संरक्षक मानते हैं, जैसे राहुल गांधी जी, who keeps flaunting the constitution, is also desecrating the same constitution with impunity. So the whole country needs to know the hollowness of Congress and its claims. The whole country also needs to understand the double standards and hypocrisy of the Congress party and Rahul Gandhi. That's why we are in Delhi, because the people who claim to be the saviors of constitution, who keep flaunting the constitution, cannot be violating and exploiting it and insulting it. So therefore, we are exploring all options, including knocking on the doors of Supreme Court, going also to the President of India, to the Election Commission, to the Lok Sabha Speaker, Raj Sabha Chairman, and knocking on the doors of all constitutional bodies, so that pressure is built in Congress not to mess with the constitution.
The job of the management is to navigate through all kinds of headwinds. As in the past several years, I remain cautiously optimistic about the guidance that we have given. And the guidance that we have given is a 10% growth in the top line over last year, with or without G20. And we think we are on track.
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you as always live from the CNBC-TV18 Motilal Oswal studios, middle of the week, Wednesday morning. and there are no rains. I mean, it was that one day of rains and Monday when we came in, but no rains now. It's not dry, but overcast, sort of rainless kind of Wednesday morning here. But is it going to rain as far as markets are concerned? Because it's been a harvest out there. Day after day, markets have been making newer highs. Yesterday was no different. Where do we go from here? That's the question as we look into earnings and the budget next week. Guys, hi, morning.
Hi, morning. Morning, Nigel. It is a concern, definitely no rains, but it's raining money on Dalal Street, right? I mean, equity mutual fund flows have hit the highest ever at over 40,000 crores. Market continues to be at all-time highs. So we've got plenty of good news on our hands.
Well, that's right. And we've got a new Indian cricket coach as well. Mr.
Yes.
Gautam Gambhir takes over from Rahul Dravid. So, you know, we're two different personalities, but going to do well for the country. So all the best to Gautam.
Oh, absolutely. All the best to Gautam Gambhir, and we look forward to more cups, more championships. Well, let's just take a quick look at what you need to know as we begin another session, this Wednesday morning, that is. So I'll begin where we left off yesterday, which is at new highs for both the Nifty and the Sensex. And broader markets, you know, in my book, made new highs as well. I mean, not maybe measured by what the mid-cap or the small-cap indices themselves are doing as compared to the previous highs. But really vibrant screen out there. And we've been sort of saying that every day, smaller the better. I mean, I think that's the motto. And that's not really gone anywhere. People are going down the list to find more and more ideas. Now, overnight, it was absolutely a consolidative kind of price action. So not very much happened. Equities consolidated on your screen, hardly any change, right? S&P, NASDAQ, a little bit higher. But actually under the hood in the US as well, if you look at industrial stocks, financial stocks, they outperformed. Maybe not reading too much into it, but those are sectors essentially which do well during phases of a slowdown, etc. There's some anticipation of that going to happen in the US. Now, on yields, it was a 2 basis point jump on the 10-year. You had the dollar index, which ended slightly above the 105 levels. Fed chairs, Powell's testimony the congressional testimony was being closely watched, but it was very balanced and neutral. Markets did not overreact. So punchline, bottom line from that testimony essentially was that, you know, more good data, which is essentially softer data, softer economic data is needed about inflation returning to that 2% target levels or wherever they're comfortable. The neutral rate, it's some more distance to go. So it didn't really do very much as far as the Fed rate pricing is concerned, etc. It was, we left off exactly there. We, by the way, get the CPI numbers, the consumer price inflation numbers tomorrow in the US, tomorrow evening. And if it slows, if it is soft, I think that should reiterate that Fed cuts are nearing. Maybe in September, we'll see the first cut. But we need data to support it, as Powell yesterday said as well. Oil prices, they slipped about 1%, just under $85 a barrel is where we finally left off at. To circle back to levels here in, for our markets, Nifty yesterday broke above its previous high of 24,401. Immediately, the Nifty should head to, in the very near term, the daily upper Bollinger Band, which is 24,600, 24,595 to be precise, is the first level. And then beyond that, the targets are about 24,900. Those are extension equality levels. You basically project higher what the last quantum move has been. Supports come in at the 40-hourly exponential average, which is at 24,268. So 24,268 should not be broken on the way down. Now, Nifty Bank also had a positive day, a 0.25% higher. It's underperformed the Nifty yesterday, but it's broken above 53,300. Break above 53,357, which is the sort of last high, will confirm a further up move. And on the downside, it should not break 52,246. And again, the daily upper Bollinger Band stands at 54,064, which is the immediate kind of level which the Bank Nifty should get to if the up move really starts to materialize. I just want to leave with this last thing which came yesterday, and we sort of covered it towards the second half of the day, which is, the SEBI expert panel on F&O essentially likely to recommend a few things. Increasing F&O lot size, so basically making it unaffordable for small retail investors who trade 1 or 2 lots. So, increase the lot size by 3 or 4x as compared to the current lot size, which right now, if you want to trade, a Nifty contract or the Bank Nifty contract, is between 5 and 6 lakh rupees. And if you raise it to, you know, whatever, 25, 30 lakhs, more than that, I mean, obviously, that will reduce the number of retail participants in the market. And the second is uniform weekly expiries. Instead of, you know, expiries on pretty much every day of the week. NSE contracts expire Monday, Tuesday, Wednesday, Thursday. You know, BSE 2 days a week. So instead of that, all expiries for NSE on 1 day and all expiries on the BSE on 1 day. So that's essentially what we are looking. That's what the recommendation is. We don't know if this will go through, but lots of interest since this is, you know, become such a hugely important part of the market out there. From a stocks perspective, it's not great news for stocks like BSE or, you know, brokers, etc. We don't know, once again, to reiterate, if this will go through, but in any shape or form, the incremental, I mean, is going to be negative for exchanges and for other intermediaries, etc. as well. So, but more discussion on this a little later. GIFT Nifty will come up on your screen. That should give you an indication of the kind of day. I don't know, 2.5 odd point change. Will it be limited to that, or will we take up pace once again a little after opening?
I think this has been a really fast-paced market, right? I mean, it's been hitting milestones day after day, and yesterday was no different. So in that sense, it is a raging bull market that we have on our hand. And of course, big events like the union budget upon us, looks like the bulls could just continue to charge ahead. The Nifty closed above the 24,400 mark for the first time yesterday. So a lot of milestones are getting hit, definitely. In the last 1 month, it's almost a 7% rally that the market has seen. The Nifty month to month is up 1,200 points in just 1 month alone. And yesterday, as I was telling you earlier, another milestone was hit where, you know, equity mutual funds in India hit an all-time high of 40,600 crores as per the AMFI data. You also had the net assets under management, or the AUM, hit about 60 lakh crores for the first time ever. So there's a lot of money flowing into India. And of course, we had both FIIs and DIIs buy in the cash markets yesterday. So 300 crores from FIIs, about 1,400 crores from DIIs. The Nifty Bank weekly expiry is today, so all eyes will be on that as well. A couple of other things to watch out for would be the Emcure Pharma listing. That happens today. The IPO, remember, was subscribed about 68 times, so that will be a new listing to look out for. And the US markets have closed flat, but the S&P 500 once again has hit another record high. So, you know, day after day, milestones are getting hit. By the way, gold prices have also been moving higher. So it's very peculiar, right? We're living in a time when both equities and, safe haven assets like gold are rising. But I guess that's what liquidity does to a market.
Well, that's right, you know, and a rational thought would be the market should pull back a little bit. But just take a look at the money that's coming in. The SIP is at 21,000 crores. The equity flows are so strong, and the FIs are not selling now. So how does the market fall? Well, time will tell. Well, let's take stock then of what the FIs did in yesterday's trading session in the F&O market. They added longs yet again. They added close to around 10,000 long positions, 10,000 longs for around 1,500 charts, and the long positioning is at around 84%. And for the last many sessions, they've been in the vicinity in that net long position of around 3.5 to around 3.9 lakh contracts odd. And the FIs, they continue to remain net long. Now they have moved to the upper end because of the addition that we saw yesterday, while clients, well, they are net short with close to around 2.7 lakh contracts odd. ITC, that stock seems to be getting its mojo back. And the last few sessions, well, it's popped up yet again. You know, it's doing virtually nothing. And if you look at it in the last 1 year or so, it's actually lower. But just in the last few days, it's moved up a little bit. And it's tending to show signs that it wants to give up the underperformance. Maybe it's playing catch up with its peers. Valuations are fairly okay. And maybe the street believes that, there's no risk with regard to any kind of tax tinkering in the upcoming budget. Those are the data points which explains why the stock has moved up. And on a weightage parameter, well, it's moved up a little bit. Remember, last year it was at around 4.7%. Weightage on the Nifty is what I'm talking about. It moved down to sub 3.5%, but now it's moving back to around 4% after the recent rally that we're seeing. So ITC, that's one stock that could support even going ahead, just going by the data points that we have got. The other one is the HDFC and Reliance. Both of them were battling for the top slot on the Nifty. HDFC is still in the lead. Just a week or so ago, the difference between HDFC Bank as well as Reliance's weightage on the Nifty was around 2.3%. Because of the outperformance of Reliance and the underperformance of HDFC Bank, that's narrowed down to around 1.4%. So that's the reason we're seeing a bit of a narrowing, and Reliance actually looks good for more. So let's see whether or not HDFC Bank can take some kind of support, because we've seen in the last few days around the 20-day MA is where it's hovering after correcting close to around 6-7% odd. Moving to the levels then, well, we're looking at the Nifty Bank, which will be the moving factor today. It ended higher with a gain of around 150 points, but it was underperforming in trade yesterday. Today it plays out the weekly expiry, so that's going to be a bit of a mover. And HDFC Bank, obviously, because of its large weightage, will be in focus. The levels, it continues to remain a buy on dips market, supported around 24,000 odd, 20 DMA as well in that vicinity of around 23,800. But as a stock-specific market, as I said, so I'm looking at Hindustan Copper. Yesterday, towards closing, we said that the data point suggested it could be coming out of the F&O ban. And by the end of the day, that was confirmed. So normally when a stock comes out of the F&O ban, we do see some kind of action. So Hindustan Copper is one stock that I'm looking at. And a cash market stock that I'm looking at is Greaves Cotton. In the last few days, the stock has seen a big increase. I think in the last month or so, it's up close to 25-30% odd. It's moving on very, very large volumes. And the auto theme came back yesterday. It's moving on very, very large volumes. The street is sensing something, maybe in fact something in terms of the numbers, or maybe in fact some kind of action from the company. But the volumes are very, very high, and the delivery-based volumes in July so far is nearly 5x of what we saw in the month of June. So that's a cash market stock that we should be tracking as well.
Okay, Nigel, thanks a lot for that. So plenty of stocks to talk about today and plenty of market-related data as well that we'll be analysing over the next 2.5 hours. But first up on the equities front, Surendra Goyal of Citi expects a 2% year-on-year Nifty headline earnings growth and flat growth for the Citi universe, excluding energy. He says Nifty earnings are expected at 8% year-on-year and EBITDA growth at 7% year-on-year, while the Citi universe earnings are expected at 14% year-on-year and EBITDA growth at 9% year-on-year. In FY24, he says earnings surprised their expectations meaningfully in all 4 quarters. He says the question now is, can this trend continue? He also says the market will focus on budget announcements, monsoon trends and management commentary on consumption trends. He says domestic flows trends remain strong and post the 26% returns in the last 1 year. He expects the markets to consolidate a bit. He also says they would buy any dips. Their June 2025 Nifty target is 24,400 based on 19 times 1 year forward PE.
All right, well, we have Mahesh Nandurkar of Jefferies who weighs in as well. He says that June quarter should see earnings growth slow by 1 percentage point quarter on quarter to a 16-quarter low of 12%. 12% year-on-year growth. This is for the Jefferies coverage universe. This excludes oil and gas and metals. This is as elections and a harsh summer may have impacted multiple companies. He says domestic, excluding financials, are likely to post 12% EBITDA growth and flat margins year on year. He says pre-quarterly earnings reports suggest slowing loan growth, some rural demand improvement and uneven discretionary consumption. He thinks 20% plus earnings growth for auto OEMs, summer beneficiaries, which is power and AC companies, property and select industrials, is likely.
Okay, let's also get you some money market views this morning. On the rupee, Kunal Sodhani of Shinhan Bank says the US dollar bounced slightly after Fed Chair Jerome Powell remained cautious on rate cuts, despite acknowledging that the US central bank's dual mandate risks are more balanced. Crude prices also cooled off and the dollar found support at 104.7 levels. For the dollar INR pair, Kunal sees 83.40 as a support, while 83.55 acts as a resistance.
On bonds, Neeraj Gambhir of Axis Bank says that the 10-year G-Sec traded in a narrow range of 6.98 to 7.03% with low volumes in absence of any domestic cues. Downward trajectory of US Treasury yields continued in the back of ISM services, PMI, non-farm payrolls and unemployment data. This further buoyed US rate cut hopes in September. Neeraj expects the Indian 10-year benchmark bond yield to trade in the range of between 6.95% to 7.05% and takes cues from CPI data due this week.
Well, a lot of stock-specific action tracked for you. We get to that in just a bit in further detail. For the time being, we run it through the list. We're looking at JSW Steel, Mankind Pharma, Delivery, KDDL, Havells, Infosys, Adani Ports, RBNL and KIMS. 9 stocks expected to open up in the green, while the lone stock that is expected to react to negative numbers, that is Deltacom.
All right. Well, we have someone who invests here in the Indian market and runs a large book. Conrad Saldana is Managing Director and Portfolio Manager at Neuberger Berman. Conrad, good morning. Great to have you with us here as always. Thanks very much for your time. Prashant this side. Conrad, the market sentiments are buoyant. I mean, I think I could use more adjectives to describe what's going on. And it's not just the new highs on the Nifty or the bank or the Sensex or the the frontline indices, right? It's really about stocks and the hunt for ideas and people kind of willing to look beyond what they've traditionally felt comfortable looking at. And I think that's showing up across the board, broadening out. I mean, I think, you know, in the US, you can say it's AI stocks leading the charge higher. I don't think you can make that accusation for India. It's a very broad-based move, Conrad. So I just wanted your thoughts there. And are you also willing to, or have you also started to look at stuff that you've not traditionally looked at because of whatever reasons?
Yeah, I think, Prashant, thanks for having me on. Yeah, we've already looked, fairly behind the headline names historically, and you had an opportunity in March when the market sold off. Right now, obviously, we're at a point where the multiples are not as conducive as they have been. But if you take a longer-term view, maybe it's the time correction on these names that might be utopian. And maybe it's an inflation print that brings a little bit of jitters into the market that gives you that opportunity. But I think we've already looked at these interesting mid-cap opportunities, knowing the promoters well, the businesses that we believe are going to execute. It's the same names. I don't think I definitely sticking with a quality bias. I would not start to go down the quality spectrum in terms of businesses, more cyclical type of ideas. In my mind, I'd come back to saying that the financial sector, which hasn't really taken part in this big rally, I think that looks to be more defensive, and growth looks good for the private sector operators. So again, ICICI is named. We've owned Industrial, hasn't really participated in this. Those to us are good businesses, going to continue to grow, and haven't really participated in this big rally.
Okay. Conrad, thanks a lot for joining in. A lot of milestones are being hit in this market, right? Another big development yesterday was that equity mutual funds saw the highest ever inflows at over 40,000 crores. And SIPs as well have seen highest ever flows coming through. There's something that the retail community, the domestic community is bullish on in the Indian markets. Is it the fact that the budget this time around has more leeway for popular?
It is definitely what has people excited, right? Given that the market's already done well into this, barring the wobbles after the election results. Definitely there could be, I shouldn't say definitely, but there potentially is the possibility of some more stimulus. But I think the government has been pretty measured in terms of keeping an eye on the fiscal. So I do not see a major trend that's going to change that. Potentially a shift in the mix. If you start to see better state finances, the deficit probably improving by 20, 40 basis points, you could see some of that being recycled. But one of the areas has been rural consumption, which has been soft. You could see some stimulation of demand there, but I would not think it's going to be a blanket deterioration on the fiscal in terms of the spending power. But consumption for me is an area obviously of focus where it has been soft for an extended period of time. Given the hikes that you're seeing with the telecom sector, that might only be 20 basis points on an inflation stat, but it probably matters, especially as you go down the income pyramid in terms of how much that's going to bite into the pocket. So we'll have to see potentially is there some relief for the consumers, but I would still go with the view that they are concerned about inflation. They're concerned about obviously external factors. You've seen how strong the dollar is. And so I do not see a major slippage or deviation from policy, potentially some tweaks. But again, I'm a bottom-up stock picker, but that's my view of India being pragmatic.
All right. Hi, Conrad. Good morning and good to see you. When valuations seem to have run up a little bit, but there are still some opportunities in the markets. And as you said, you're a bottom-up stock picker. What about tech? That's come back in a big way. The last 1 month or so, it's been a big outperform in comparison to the Nifty itself. I think the Nifty IT index is up 15%. It'll be bracing for a couple of numbers. How are you placed on the tech space?
On the tech space, Nigel, we were more conservative, given that we saw earnings, especially revenues, start to get impacted. You're seeing budgets from enterprise side being a little tight and more concerned, given that they had to allocate to this whole AI spend. and trying to get all those GPUs. There's a massive allocation of capital that's gone there from these IT budgets globally right now as CIOs are trying to figure this out. So what it meant that the IT service bids were taking longer to close. They were getting pushed out the scope. Some of them getting reduced, but also getting probably pushed out and cancelled. So you're seeing a lot of these deferments coming through. But my guess is those are being factored in, and now you're looking at an opportunity where, for folks in the nearer term where the whole market has done well. These have been big laggards, and there's a narrative that software and services are later cycle businesses that should see some benefit with this AI spend. But I think it's too early to call that as a proper shift. But the valuations start to look more conducive, given that the market broadly, barring, I would say, tech, financials, I would probably put in pharma into that space, and consumer stocks haven't really participated in that rally broadly. And so I think you're seeing a little bit of money flows helping that sector more than a major shift back in fundamentals.
Conrad, sorry, go on. Please finish that point.
Sorry, I was going to answer, Nigel, to your point that where we, on our tech exposure has really been, as we mentioned before, it's been on the EMS side. So on the manufacturing, which continue to execute well. We also have a software exposure through Orient Pro, and that's a good banking software business. Those are where our exposures are. We are seeing really solid growth coming through.
So Dixon, Keynes, some of the EMS manufacturing kind of plays, I'm assuming you still own. Jyoti CNC is a name you've spoken about. Venus Pipes is something you've sort of outlined earlier. Orient Pro, I think, that you just sort of mentioned. And of course, the big banking names, right? ICICI and HDFC Bank, etc. So that's some of what you own in your portfolio. Got that?
With some of those, Prashant, we probably our preference on the banking side has been ICICI and IndusInd Bank. I think, like I mentioned historically too, HDFC is just a longer term runway in terms of the merger being digested.
All right, fair enough. We'll leave it there. Good speaking with you. Good chat as always, Conrad. Appreciate you joining us here on the program. Thanks very much for joining us. We'll take a quick commercial break here. Our list of top stocks to watch out for. Our research team will get you that. We're back after a quick break.
Dr. Sunil, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning, to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth. India.
Welcome back to Bazaar Morning Call. Hope you're having a good morning of trade. What a time to be an investor in this market, right? Record highs for the market, 24,400 for the first time ever. And June was actually a watershed moment for the Indian mutual fund industry as well. We saw that AUM of 60 lakh crores hit for the first time ever. So lots of traction seen. But we have our entire research team joining in now to help us with the list of top 10 stocks as we begin a brand new day of trade. Gentlemen, morning to all of you. Nigel, first to you. You're looking at JSW Steel.
Well, that's right, Sonia, because they came out with their quarterly update and the production numbers are out and no big negative surprises on that front, more or less on expected lines. So the combined steel production, that's India as well as the overseas operations, that was down by close to around 4%. The India operations were down by close to around 1% odd. And the capacity utilization levels for the India business is relatively okay at around 87%. They've gone on to mention that they had a capacity shutdown, a plant shutdown. So because of that, there was a bit of a degrowth. No big negative in these numbers. Sentiment has been a little bit weaker, but that's because of the monsoon. Going with a tinge of green on this one because there's no disappointment on any parameter.
Okay, all right, got that. Well, let's move on. Sudarshan is joining in to tell us about some block deals that you should be looking at this morning. Sudarshan, over to you.
Morning, Sonia. So, two block deals that might take place in today's block deal window. So, first is Mankind Pharma. Capital Group affiliate HEMA CIPF is likely to sell 0.9% equity via block deals, and issue size for this block deal is rupees 763 crore and price is rupees 2061 per share, which is a discount of 2% to CMP. As of March 2024, HEMA CIPF holding was at 2.22%. Next is Delivery. Canada Pension Plan Investment Board may exit the company, and in today's block deal, it might sell 3.17% equity, and this block deal comes after this fund had sold almost 3% stake in April, and for today, issue size of the block is rupees 886 crore and offer price range is rupees 378 to 389 per share, which is a discount up to 3.5% to CMP. As of March, the holding of Canada Pension Plan Investment Board was almost 6% stake in the company.
Okay, all right. Thank you very much, Sud, for that. But let's also focus on Delta Corp and KDDL. Mangalam is standing by to tell us why. Mangalam, morning.
Good morning. So Delta Corp reported their first quarter numbers, and first quarter is a seasonally weak quarter anyway. So add to that, there was a perfect storm of bad news for the company. The first one was, of course, higher GST, elections and heat wave impacting their casino operations. And secondly, there was weakness in the online skill gaming business as well because of higher customer incentives. So if you look at the overall revenue of the company declined by about 30%, and that's had a bearing on their EBITDA as well, which is down 68%, as a result of which margins compressed all the way from 37% to 17%, and the net profit fell by 68% at just around 22 crores. It was a decline both quarter on quarter and year on year. If you look at the segments, casino, the revenues declined by 25%, with EBIT declining 62%. Online gaming, if you remove the incentives that they gave to customers, so the decline is almost 88%, and that's reflected in the online gaming losses as well. And hospitality too, as a result of which was down about 17%. Regulatory uncertainty continues, even though the company still hasn't made any provision for the big GST demand that they had. They believe that they can get out of the woods on that one. So as a result of which, going with red on Delta Corp, especially because we had seen a bit of a rally a couple of weeks ago as well. KDDL, on the other hand, has gone ahead and approved a 90 crore buyback. They'll buy back about 2% of the equity at 3,700 rupees via a tender offer, which is a 12% premium to its current price. But remember, at 2%, the acceptance ratio would be a lot lower. Promoters take at 50%. They are included in the buyback as well. But the other thing to watch out for KDDL is the fact that it is the promoter of Ethos and holds about 3,100 crore worth stake in the company, as against its own market cap of 4,200 crores. You obviously have to give some holding company discount.
Okay, thanks a lot for that. So Delta Corp and KDDL on our radar, but Upasna is joining in to tell us why you should be watching Havels this morning. Upasna, over to you.
Good morning. Thanks so much for that. Well, the company announces expansion of its manufacturing capacity of cable with an investment of 375 crores in order to cater to the increasing demand is what the company has indicated. It plans to expand capacity of cables to 41 lakh kilometers from 33 lakh kilometers in Alwar, that is in Rajasthan. The existing capacity utilization is around 70% and the proposed capacity will be added in a phased manner by March 2026 is what the company has indicated. Hence, I expect the stock to open in green today.
Okay, all right. Thanks for that, Upasna. Well, let's wind this down with Vivek, who's joining us with some more stocks and news. Morning, Vivek.
Well, good morning. Quite a few stocks, that have had news flow coming in post-market as yesterday. First on our radar, Infosys, a long order win is what the company has received. It's a 5-year order win that the company has got from a company called as Sector Alarm. This is a European-based company. It's a security service solutions provider, and it's partially owned by private equity company KKR. So Infosys will help the company to migrate the ERP platform that it currently has to the Microsoft Dynamics Finance and Operations. The other stock on the radar is Adani Ports. The company has received a letter of intent for berth number 13 at Deen Dayal Port. The company will operate this particular berth under the DBFOT basis for multipurpose clean cargo, including container cargo. Now, this particular berth has a capacity of close to 5.7 million metric tons per annum. Also, keep an eye out for KIMS. Now, the company has gone ahead and acquired a 200-bed hospital in Vizag for 75 crore. The acquired company had revenues of close to 62.5 crore for FY24. And lastly, watch out for RVNL as well, another MOU that the company has signed. This particular MOU has been signed with Tatweer. Now, this is a Middle East as well as African company. This particular MOU is mainly targeted at using RVNL's expertise in the railway sector for joint design and execution of various rail-based work in the MENA region as well as European countries. RVNL is also in focus. It's received an order of almost 187 crores. This is for Nagpur Metro, where the company will be going ahead and constructing 6 elevated metro stations. So expect some green on RVNL today.
Okay, thanks a lot, Vivek, for that. Well, here's a quick recap of our top stocks with positive news flow. There's JSW Steel, Mankind Pharma, Delivery, KDDL, Havels, Infosys, Adani Ports, RVNL and KIMS, while Delta Corp is the stock on our radar with negative news flow. But let's do one thing. Let's hop across to Manisha Gupta to tell us about all the action from the commodity markets overnight. Manisha, good morning.
Morning, Sonia. Thank you for that. I'll start with the crude oil prices, where we did see 3% of decline in prices in the last 3 days, but it really seems to be consolidating right now. The Hurricane Beryl is out of the way and hasn't made much impact on the oil facilities, and the Canadian wildfires seem to be lessening as well. But the street will watch out for the U.S. crude inventories data today, and there's an expectation you could be looking at a second straight week of decline here. Also, a very interesting report from EIA suggesting that the global oil demand will outpace supply in 2025. I mean, the market will watch out for more numbers to that effect, but that can take the crude prices higher from where we are right now. Well, after the Powell testimony yesterday, where he talks about or cautions over leaving interest rates at too high a level, there is some strength in US dollar index, and that's weighing on commodities. So gold and silver is off its highs. Copper is off the 1-month high it was trading at. Iron ore and steel prices also have gone in for some profit taking. The markets will watch out now for the US inflation data that comes in on Thursday.
Right, Manisha, thank you very much for that. We'll take a break. We are back. Deven Choksi of DR Choksi FinServ will be joining in with some fundamental stock check. Stay tuned, that's coming up.
Biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So it's, I would assume, looking at the stats, that the rural problem would be slightly more because also availability of, toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FI.
Welcome back. You're tuned into Bazaar Morning Call. Well, we have listed down all the top stocks you need to track, but Sudarshan is joining us because he's gone through a whole host of brokerage notes. Morning, Sudarshan.
Morning, Nigel. So I have three stocks in today's brokerage corner. First is Supreme Industries. Jefferies maintains buy call and target is raised to 6,700 from rupees 5,390 per share. It says in April-May, volumes have grown by 22% year-on-year despite a high base, and sales growth were at 12% impacted by PVC volatility. It says a focus on value-added sales may aid the margin, and it expects company to be a good play on housing, capex and agri, and it estimates 25% plus EPS CAGR over FY24-27. Next is GS on Credit Access Grameen. It maintains buy rating with a target of rupees 1,784 per share. It says test offers limited downside and risk reward is favorable. In the base case, it expects company to deliver PPOP and profit growth of 26%, 23% over FY24-27, and expects average ROA and ROE of 5.4%, 23% respectively over FY24-27, and expects company to meet the guidance that company has given for FY25. Last is Investec on BSE. It maintains buy call with a target of rupees 3,400 per share, but it has closed its long fast call that it had on the stock due to regulatory risks. It says regulatory risks may outweigh benefits of rising volumes, and if regulatory changes are implemented, it will impact its forward estimates, and company aims to protect profitability through higher market share and lower clearing charges. So these stocks might be in focus today on the back of brokerage's views.
Okay, thanks a lot for that. Well, Deven Choksi joins in. He's the Managing Director at DR Choksi FinServ. Deven, hi, good morning and thanks for joining in. It is really a momentous day, week, month for the market, right? Fresh milestones are being hit. But if you had to create a shopping basket now of stocks, either large or mid-cap, where there still seems to be some more valuation headroom and where growth prospects are looking good, what would your list look like now?
Hi, good morning, Sonia. Well, I think the list would start with particularly the large banking and financial companies, including the NBFCs, largely because of the fact that as we see the growth in the economy unfolding at a rapid pace, some of the larger institutions who have got ability to lend bigger sum of money to the borrowers, they are the ones who are likely to be, I think, the biggest beneficiary. Be it likes of Bajaj Finance in NBFC space, or be it SBI, HDFC Bank in the banking space, who are having the larger AUMs, I think are likely to grow and grow bigger in next 3.5, 4 years' time. Most of these companies are actually reporting growth in excess of around 20%. From the AUM growth perspective, Bajaj Finance kind of continues to clock at around 30% plus rate of AUM growth on a month, year-over-year basis. So from that particular point of view also, I believe that I think these companies are very well positioned. Not to forget one more thing, that I think they are also having some of the larger franchises under them which are listed, and they are actually, I think, generating monetization abilities for these companies. So this is one sector which we like, I think, from the investment perspective, even in this market, because valuations are not very expensive. Otherwise, I think consumable or consumer segments, discretionary space, particularly, I think the auto ancillary remains one among the favorites. Of course, I think most of the stocks are adequately priced today, but some of the auto ancillary companies could possibly give relatively better return going forward. And last but not the least, I think some of the mid-tier IT companies which are in engineering R&D list, engineering R&D space, and on some of the niche areas in the auto and aviation space, those companies are reasonably looking sure from the point of view of reporting around 25% kind of CAGR growth in next 3 years' time. So we selectively buy some of these companies, even though some valuations are at a higher level. But I think yes, any corrective market, they give opportunity to buy into some of these companies.
No, got that. You know, Devin, hi, morning. What's your views on Maruti, which I'll get to in just a bit. It was a big mover yesterday, right? 7% odd. But I want to start by asking you about your thoughts on the on what SEBI expert panel is likely to recommend a lot size increase and we sort of just to curb F&O volumes. You know, I think the really negative thing would have been if they one of the suggestions was, which we don't know if it is there, but it's not been reported yet, is to sort of remove contracts, you know, themselves instead of sort of having expiry on one day. But given what we've seen so far, and we don't know if this will go through or not, what's your sense? Stocks like BSC and some of the broking companies, broking stocks which have done very well, Devin, go on.
Yeah, Prashant, good morning. Well, I think I have seen the derivative market since the birth, I think, and we have probably, I think, seen how exactly the entire derivative market got structured with a minimum lot kind of applications. I think we have lived this particular era. Today, the time has come wherein I think you need to free this market. I think there should not be any requirement for any market lots. I think if you want to actually indeed curb the speculation, the better ways are available today. Like, I think you have an underlying portfolio. You cap, I think, the speculative activity to the underlying portfolio. So that at least, I think, you will not see the manipulation in the market lock, stock and barrel, which we are currently seeing in some of the smaller and mid-sized companies, where probably these companies are quoting at a valuation of 100, 150, 200 times price earning ratio in some of the cases. I guess, I think that is where probably the corrective actions are required to be taken. You look at Nifty 50 baskets of companies, you never find, I think, irrational valuations in these particular companies, largely because of the fact that the derivative market is active in those companies, and that is where probably I think it's a leveler, as I see. I guess, I think, instead of, I think, tweaking around with the market lot size and creating a roadblock like this, where the volume is threatening to get shifted to, I think, the Dabba trading, which is a nuisance. I believe that I think this particular subject has to be, I think, taken up a little bit more seriously these days now. Maybe, I think, we have lived with the market lot concept, which is now time to peg the entire derivative business, I think, along with your investment portfolio. You already have every stock under demat, and I think it is easy to, I think, match investment portfolio to the exposure that one takes, I think, in the market. It will automatically restrict the market practices. At the same time, I think the risk management also will be more prudent than what it is currently.
Got that. You know, Devin, stay with us because we also have Rajesh Baheti on the same topic. He is, of course, Managing Director at Crosseas Capital Services. Rajesh, good morning. Good to have you with us here. You know, some of what has been, what's being reported in terms of what SEBI panel is likely to recommend is stuff that I think you were very much in line with as well, right? Which is increasing the F&O lot size. That's the most obvious, gets the most play. But there are other things, one expiry per exchange per week. And a few other things. Just your thoughts on what you've seen so far being reported as suggestions, Rajesh.
So yeah, first let's put some things in perspective. When we report that we are doing 80% of the world's market turnover, I think let's put that in perspective first. For example, if you take the lot size of the E-mini S&P, which is the E-mini S&P, that's about 2 crore 33 lakhs today versus 5 lakhs. Is the lot size in India. And therefore, if I do 5 lots and the S&P does 1 lot and I report that I'm doing 80% of the volumes in the market, I think that is a wrong way to look at the markets. So you also got to look at the lot sizes and the total turnover by way of premium rather than reporting a number of lots traded as market share. So first thing, let's get things in perspective. Secondly, I think SEBI has clearly spelled out a problem statement that they have a problem with the lowest rung of retail entering this market and trading and getting attracted to trading, maybe getting addicted to trading. So 2 things. One is that I think today there are many other ways to get addicted. If you look at the scores of websites offering gaming on cricket, on poker, so maybe a study needs to be done as to how many UCCs are active in the F&O segment versus how many people are trading or speculating or playing those kind of gaming stocks and are part of that. So I think a little bit of perspective there would also help. The second thing is, if you want to attack the lowest rung of retail, you've got data on the number of UCCs that are trading the market today. If you want to get rid of, say, 20% of these, I think the best way to do it is increase the lot size, and that's a global pattern also, that the lot sizes in derivatives are higher than the lot sizes in the underlying market. So increase the lot sizes, and B, maybe set a financial liquid net worth criteria to be able to do F&O. And if somebody below that criteria were to do that, maybe specify an exam or qualification to be passed, because if you have the knowledge, I don't think finance should be restricting you. But what we're discussing today is so many variables that we want to play around with. I think that is where I fear that we are heading into a territory which could have unintended consequences. We know what has happened with the currency derivatives market. It took 15 to 20 years to build a market and one guideline to finish it. So instead of attacking many variables at the same time, I think just putting a little bit of a filter for retail, I think for the time being can do the job. You can always take data after you've done this.
Right.
And
Rajesh? No, got it. But I think what is being proposed is, I think, in line with what you were saying, increase lot size, right? That's one. Restrict weekly options, to one expiry per week per exchange. And limit the number of strike prices for options, upfront collection of options premium, something I think you've also advocated for, intraday monitoring of position limits. So these are all, I think not really out of the realm of what you yourself have been advocating, right?
No, not at all. If you restrict, let's say, option expiries to one per exchange, now I tell you what is the problem. The NSE has two very active contracts, which is the Nifty and the Bank Nifty. The BSE has one fledgling upcoming contract by way of the Sensex. Now, NSE has a market share of 80-90% in this market even today, and the BSE is 20%. Now, if you tell the exchange that you can only do one per contract, one expiry per week, you are actually giving BSE a chance to become 50% of the market, and by not by a very fair means, because you're telling NSE that you have to choose between the Nifty and the Bank Nifty, which are actually today the two most liquid contracts in the market. You choose one of them, and that then leaves the door open for BSE to come in. On the other hand, if you restrict weekly contracts totally, then I think the BSE would stand no chance at all to get any sort of market share. So I think these kind of measures are not advisable. In my
Rajesh,
opinion.
but why would you put NSE at a disadvantage? I mean, if, say, for example, all contracts expire on a Thursday for the NSE, anything on Friday for the BSE, right?
No, the way is that capital gets rotated. Now, if I have 100 rupees of margin, I can only choose the $100 to be spent or utilized for certain contracts. And we all know, and this is a global phenomenon, that the shorter expiries attract more volumes and more intraday and special, HFT volumes. And if you were to restrict an exchange to one contract per week, then you're going to get a situation where the contract that is not the weekly expiry will completely die down. So I think, asking NSE to choose between Nifty and Bank Nifty would not be fair to NSE.
But surely this is better than withdrawal of weekly contracts, right, Rajesh? Because that was one fear.
If your problem is with the lowest rung of retail entering the market, why are we finding solutions that might have unintended consequences, like destroying a segment of the market or destroying a product? We know how easy things can get destroyed We've seen that happen in the recent past. I think if the problem is the retail, the solution lies in just putting some entry barriers to the lowest rung of retail. I don't think SEBI has a problem if a rich guy comes to the F&O and loses some money.
Yeah. No, got that. So the weekly options to 1 day, one day per exchange per week. I mean, that's essentially. But some of the other things that I mentioned, anything you have? Is there a pushback to any of the other measures?
Yeah. So in 2019, we moved from a very unscientific way of margining to an extremely scientific way of margining. And in return for that, we went to 6 sigma from 3.5 sigma, which makes us today the most margined market in the world and the safest F&O market in the world. And to fiddle with margins, I think would be counterproductive because you're going away from science. I think something that are derived statistically should not be used as administrative tools to control markets. I think I'm completely against use of margining as a tool to manage volumes in the market, because all you're going to do is distort the science behind the application of margins, which is to contain risk, and be not allowing exchanges to freely launch contracts, because I think if you're allowing exchanges to list themselves, they are competitive and for-profit entities, and they owe it to their shareholders to find ways and means to increase shareholder wealth. So I think those kind of controls, I would not be in favor of.
Okay, got that. Rajesh, sort of short conversation today, but we'll have you back because, these are suggestions. These are likely recommendations by the expert panel. We don't know how many of these will go through, but what you're saying is raise the entry barrier, larger lot sizes, and that should take care of the problem. If the problem, as the regulator sees, is retail, very small retail investors come into the market, and of course, maybe sort of mandate an exam, etc., to test knowledge when you enter the futures and options segment. Thank you very much for joining us. Good chat as always, Sonia.
Okay, well, let's move on. Deven Choksi is still with us, and we have, I think, about less than 10 minutes to go before the pre-opening rates kick in. Deven, I wanted your thoughts on the IT stocks, because tomorrow onwards we'll start talking about them since TCS and HCL Tech are coming out with their numbers. Ahead of that, would you buy into any of the IT names now?
Well, I think the 2 or 3 more important points, which we will possibly, want to listen from the company's management and the commentary coming out. On one side, we see probably the downtrend in the business is getting arrested. So which confirmation, which we want to have it from the companies, if at all, that is the reality for across the board. The larger companies, TCS, Infosys included, have been winning some of the long tenure contracts with a larger size. This is very, very significant, because that gives you a sustainability over a period of time, as far as the business aspect is concerned. Couple of things personally I am also observing, how significantly they are changing their business model from typically a code base or the coder company, getting into the computing space. If that is a approach that they are adopting, then possibility of you seeing the business model giving better results going forward, particularly in form of larger contracts coming in from cloud computing space, contracts coming in from the AI space to these companies. I believe that valuation wise they are not threatening, but they are not expensive. From a perspective of looking at higher growth and a re-rating in the stocks, one would like to see some of the confirmations on the observations that at least I've put across, and the research that we are carrying on the subjects.
Okay, all right, Deven, thanks a lot for giving us that comment. By the way, just looking at the block window, appears a couple of those large trades have taken place. Delivery, there's a big block that's taken place in the block window on the BSE. So that's one stock, and I think Nykaa as well, there's a reasonably large size block that's taken place out there as well. So we'll try to get you further details on that front. We were anticipating the delivery one. For the time being, we'll slip into a short break. You come back, we'll get our technical experts as well, who will be joining us on the other side of the short break. Sudarshan and Mitesh are waiting for us.
If FIs would buy, markets would rally. If FIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high. We invite you to join us as we persist.
Okay, welcome back. There is a lot to track this morning. 5 minutes to go for the pre-open session. GIFT Nifty is indicating a flat 10-point higher start. But what will it be through the course of the day and how can you profit from it? That's the question. Mitesh Thakkar and Sudarshan Sukhani are with us with some answers. Gentlemen, good morning. Good to have both of you here. Thanks very much. Mitesh, just a first sense on the price action, new highs for the indices and broader markets looking very, very good as well. What's the trading strategy for the Nifty and the indices before we go to stocks? Mitesh, you'll have to unmute yourself.
Good morning again. We've been avoiding the indices for the last few days. I think expecting a sideways movement. And it was surprising to see the price make a new high, though the momentum hasn't. So my sense is that I think, we still would not see a very strong up move happening in the indices. Therefore, focus should be on the stock side. But in case we get a decline close to about 24, 240, 250 levels, I think that's where I would want to hunt for buying opportunities on the Nifty.
Sudarshan Sukhani is also with us. Sudarshan, at what point do you look for fresh buying opportunities? I mean, this is a market that is really not, given us any dip at all to get into. So what does one do now and what are the stocks to look at?
Well, for a positional trader, you can close your eyes and buy whenever you want. That doesn't matter. But for an intraday trader, there are days when buying is suggested. Like yesterday, I had said, let's buy. And today, for the Nifty, I expect a lot of choppy market action. So for intraday and swing traders, today is a day when you want to buy only if you get a 100-point dip from the opening price. If that doesn't come about, just avoid both the indices. And as I said, for positional traders, this market is going up, buy when you want.
All right, just hold on. That Mankind large trade has taken place at the bottom of your screen. 1% changed out there. So Darshan, give us some of those individual trading ideas as well.
Sure. Yesterday it was FMCG and today it's primarily auto. TVS Motor is a buy with a stop under 23.20. Bajaj Auto is a buy with a stop under 9400. I also have one intraday short RBL Bank, which has a stop above 258. And finally, Havells is a buy. It's also a positional buy with a stop under 1850.
Okay, Mitesh, what about you? What would your, stock ideas be for the day?
Well, 3 buys to a sell on the buying side is Hindustan Copper with a stop at 340 for targets of 362. PI Industries is a buy with a stop at 3800 for targets around or above 4000. And a buy on Nestle from the FMCG pack. Keep a stop below 2604. Look for targets of 2720. On the selling side is Bank of Baroda. We had sell calls earlier as well. Keep a stop at 266.5. Look for a target of 250.
All right. Gentlemen, we'll talk again. Thank you very much for joining us, Mitesh and Sudarshan. Appreciate it as always. We'll take a break. We are back with the pre-open, which is about a minute away. And we'll come back with some more trades on the F&O side. We'll also have the management of Keystone Realtors, and we put the focus on their business as it stands. Stay tuned.
Of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and
Welcome back. We have 15 minutes before the pre-opening rates kick in. And no, actually the pre-opening rates are kicking in. We have 15 minutes before the market opens for the day. Looks like it's going to be a good start. I mean, just look at that. The Nifty above that 24,500 mark. Rajesh Palvia joins in. He's the Vice President Technical and Derivative Research at Axis Securities. Rajesh, hi, good morning. What are you looking at in terms of individual stocks? What's on your list for the index itself?
Good morning, Sonia. So looking at structure, we are still holding our bullish view, and we believe that, this momentum can extend further, and possible target for Nifty we can see towards 24,550 to 24,600 also in the continuation of this up move. Looking at the data setup, most of the put writers are, still writing at 24,300, 24,400 strikes. So that may act as a immediate support area for any kind of minor dip if we get in the market. Though there is a sector rotation is happening in the market, a lot of sectors which were consolidating is now started participating. So we believe that, a broader market may behave on the bullish manner, and, a lot of opportunities are there on stock specific. To play this up move of Nifty, we are initiating here to buy 24,450 call option, which was close at around 78 rupees. If you get opportunity to buy this call option around 70 rupees, it's a good level again to re-enter and to buy this call option. We are projecting target towards 130 to 140 for this call option, as we are expecting that, this momentum can extend further. You can keep a stop loss of 45 rupees to buy 24,450 call option. For Bank Nifty is still holding at 52,500 level. So major put base concentration is placed at 52,000, 52,300 for near-term structure. So till 52,300, 52,000 are intact for Bank Nifty. Here also we have bullish view. And once we able to take out above 52,800 level, there could be a short covering, and then possible target for Bank Nifty we can see towards 53,300 to 53,400 also. Here we feel that, some of the private bank are looking very promising, so that may contribute to this upward momentum. On the stocks front, we expect that, pharma space can do well. So Dr. Reddy is looking attractive. The way stock is moving on the daily as well as on the weekly chart, we believe that, here we can see a upward momentum. Possible target for Dr. Reddy on the higher side, we can see towards 6650 to 6700. So one can buy Dr. Reddy with stop loss of 65.20. The second stock that we like is Grasim. A very strong buying in last half an hour of trade in previous day. Stock managed to give breakout of last 3-4 days consolidation. So we believe that, Grasim can extend its up move towards 28.30, 28.40. So Grasim is buy with stop loss of 27.60. And the third stock that we like is from automobile space, that is Tata Motor. The stock is now closed above 1,000 level, and looking at the near-term structure, we believe that Tata Motor can extend its gain. 1045 to 1055 would be the next target. Keep your stop loss at around 995.
Okay, thanks for that. Well, we are heading into the pre-opening rates. So let's just get one quick look at it. Remember, the Sensex is now almost at 80,500. So big milestones being hit over there. The Nifty as well, almost at 24,500. And looks like that momentum is something that can continue. There is so much money that's flowing into the Indian mutual fund industry. It's not even funny. Record high AUMs, record high SIPs. And of course, you're going to see that, reflect on the market as well. But let's talk about the real estate sector, because there are some niggling worries. The volumes for some of these players have actually fallen year on year and quarter on quarter. Is it an oversupply issue? What's happening with pricing? Keystone Realtors is the first management on the show today. They reported a 22% growth in pre-sales for the quarter ended June, but collections and volumes declined on a year-on-year basis. Vaman Irani, the Chairman and Managing Director at Keystone Realtors, joins us now to talk about that. Vaman, hi, good morning. Always good speaking to you, to understand and get a pulse of what's happening in the market. We've seen a drop in your volumes, both year-on-year and quarter-on-quarter. Can you explain that to us? Is there some demand slowdown that we're seeing? Is it because of an oversupply or just pricing issues? What's going on here?
It's always good to be on your show, but with so many things you're putting up, really none of those are reality right now. The markets continue to stay robust. These are just quarters that we are cyclically attuned to kind of see the responses in. We've done about 611 crores worth of sales in the first quarter. We've collected 485 crores. I mean, the first number, 611 crores, is almost 22% higher than the same quarter last year, and 485 is almost the same amount of money that was collected as of last year. Our projections are well on track. We had guided for about a 3,000 crore revenue this year. We are very well on track for even our launches, having done 2 launches in the first quarter of the year, going more than 2,000 crores. And our BD activity continues to remain strong. Mumbai, MMR as a market, you don't need me to say this, but everybody's aware, is actually a growing market even today. And we at Keystone Realtors, Rustamji, the brand that we drive is a well-accepted brand amongst even the redevelopment as well as the greenfield projects that we do. Our township project will see a couple of launches coming up in this quarter. And as we go along in the year, there'll be many more launches in the western suburbs, which are the strong suburb, for sales in Mumbai.
Okay, so 3,000 crore revenue guidance in FY25. Vaman, I am with you on that. I mean, you just look outside in the city, you see the kind of demand there is for real estate, and you'll understand what the pulse is. But I was just going by the exact data that came out in this quarter. And as you say, perhaps reading it quarter on quarter may not be the right thing. So tell us a little bit about the full year, right? You gave us a revenue guidance. In terms of a pre-sales guidance, what are we looking at? Will you be able to see the kind of 40% growth that you clocked in FY24? What are the numbers? And you have a couple of projects that you've launched in, say, a Virar, a Thane, Juhu, Bandra. When do all of those come up?
So, thanks for that question. Actually, it's our township project, which is there in Thane, like I just mentioned. Thane is going to have 2 project launches or a couple of launches taking place in this quarter and the next quarter. Our Versova project got launched. Our Matunga project got launched in the first quarter itself. We have a few more launches coming up in the Bandra area. We're also looking at Andheri. There is also a strong possibility of being able to launch our eastern suburb large project in Chembur in this year itself. We are very, very strong on our guidance as of right now. 3,000 crores is what we had mentioned, and 3,000 crores is what we will definitely be able to clock, which will be more than a 25% over last year, and we are pretty conservative on our guidances, and given the market strength, we should be able to outdo that. And so just very quickly, we at Keystone Realtors have raised about 800 crores in a QIP just recently successfully. We have about 300 crores of cash balances, and the projects that are ongoing will also be putting cash into our kitty. So we're very strong on our BD, where we'll have a very strong, we'll have good enough dry powder to be able to go out there and get on to get more projects in. Our acquisition strategy is well on track. We are at the same point of time working on the markets in the western suburbs, as well as moving towards the city, which I had last time also mentioned, is a very strong market going forward, given the entire infrastructure boost that's taken place.
Oh yeah, I mean, and that's extremely crucial, right, for real estate, roads and bridges and infrastructure, etc., coming up, and that is coming up now finally. Boman, hi, morning, Prashant here. I have three questions. One is, some have said that in micro markets like Gurgaon, etc., there is a lot of investor demand now. A project gets sold, and we are told, well, a project is sold out in a day, 2 days. A large, significant proportion is brokers and just investors. Playing for the price appreciation. Can you tell us what is the situation here in projects that you've launched or that you're aware of in Mumbai? Second question, a lot of traditional non-Mumbai players are getting very aggressive here now. Puravankara is here, Prestige is here, DLF is here. They've got significant launch pipelines. So is competitive intensity going up? Go on.
So, very simple. Mumbai has never played as the North has. We've always had very good demand out here. Our developers always calibrate the launches based on a lot more data. I'm not saying the Gurgaon market is anything short of a miracle, actually, where the demand just continues to surge. It just operates in that manner where first round the investors or the brokers come and make their bookings. And then, of course, secondary and tertiary sale keeps taking place where people get a price appreciation. Mumbai has not seen that kind of trend in a long time. We are pretty certain about the kind of end user profile that we are working for. Your second question is always interesting. Mumbai, the market is large. Just to give you a number, 42% of the recognized residential real estate market or thereabouts of the country takes place in the MMR. Why won't it attract developers from all across the country? The good part is these are all good developers who are coming out here, and more organized development will take place. Mumbai has the ability to grow. We welcome this competition because they learn, we learn, the market itself grows because they're coming in, because they bring their customers also in over here. We welcome them. We know that the Mumbai market is not the easiest to navigate. They will have their learning curve. And we are just well ahead on them as far as this learning curve is concerned. I'm very happy to continue growing in this market. There are newer pockets also opening up, like I mentioned, the entire city front, which has not so long not been touched because there was no development out there, except for small little, one or two developers who took interest in that area. Now will open up because of the infrastructure. So there's plenty of room for all of us to grow, and I think organized developers always help to grow the market.
All right. Hi, Baman. Morning and good to see you, Ben. Very quickly, I wanted to get your view on the redevelopment market. You have mentioned in this update as well that you maintain redevelopment leadership and will continue to grow that. But you have other companies, Mahindra Lifespaces, Oberoi, they have also entered this redevelopment space. Do you think that this is the way the Mumbai market will grow now? And as a percentage of your mix, how much will redevelopment account for?
Nigel, you and I both live in Bandra, and we've seen the kind of development taking place around here, right? Do you see any of these names doing any kind of development out here? They are all there. They're all getting into the business as of right now. As I mentioned, Rustamji has been in the business of redevelopment since the year 2001, I think, when we did our first redevelopment project in Bandra. So what I mentioned earlier stands over here as well. There is a learning curve. These companies are finding it absolutely imperative to get into this business because their land areas are being made available only through redevelopment. I think it's a great move. I think all these companies, Mahindra Lifespaces, Oberoi, everyone that you mentioned, including Puravankara, DLF, all of them are going to be in this fray. All of them are going to be doing organized redevelopment. All of them have all of us actually right now have the kind of cash balances that it takes to complete these projects, because that is the most important thing, that you cannot leave a building half done. And we all remember what happened in the year, I would say 2020, when a lot of these buildings were standing like, just standing there gray in color and not getting finished. This time around, that should not happen, and I'm hopeful that with the surge, that the increase that takes place, the market is actually increasing, and all of us will have plenty of room to play. Having said that, leaders always grow the most in markets like this, and I'd like to say that we're ahead of the curve of them.
All right, Baman, appreciate you joining in. You're unperturbed by the competition, but the redevelopment market on the whole will grow as well. Thanks a lot for joining in and giving us all those details. Well, let's get in Sudarshan Sukhani for his call of the day. Sudarshan?
Well, Havells is a buy with a stop under 1850.
All right, Mitesh, you?
I'll go with the buy on Nestle for targets of around 27.20.
All right. Thanks very much for those. Let's just look at MCure now. A quick look at the company before the listing. Sonal is here with details. Sonal.
Thank you so much for that. Well, it was a strong subscription, so that could be the stock of the day as well. Total subscription came in at 67.87 times, which was very strong. A lot of interest from NIIs, a lot of interest from QIBs as well. The retail portion, though, was at 7.21 times. Remember, the company has already raised 582 crore rupees from anchor investors. The price range of this issue was 900 to 1,008 rupees per share. The FY24 EPS is at 27. That means at the lower level of the price band, it would be 35 times in terms of value. And the upper band, it would be around 37 times. A table will come up for you on the screen. It will just indicate what the levels of valuation could be, considering the different price levels the stock could list at. Since it was a very strong subscription, it's expected to be a strong listing as well. If it lists at around 1400, it could trade at 50 times. If at around 2000 levels, it could be 73 times as well. And it is a homegrown pharma company, and the other details will be there for you.
All right, Sonal, thanks very much for that. That's a punchy snapshot of what MCure looks like. Strong subscription market starting a little bit flat right now, 10-point change lower. 24,420 is where the index is at. The Sensex is down 70 points now. So fast changing screen there. We're about what 80,284, 80,290 now actually. So yeah, I mean a little on the downside, but flat is how you describe things. Market breadth, look at that. And that tells you, you know, the mood in the market. 1,400 are starting higher, 350 are starting lower. Nifty Bank is down about 0.25%. IT index is up about 20 points, 22 points or so. And I think we'll have mid caps and small cap indices also come up on your screen, which will give you a sense of what the start is looking like. But on the headline, it is a pretty flattish start. Sonia.
Absolutely. And, you know, just a couple of stocks, right, that are in focus this morning. Infosys has bagged a 5-year order from Sector Alarm, which is an affiliate of KKR. And of course, ahead of the IT numbers, all of these stocks will continue to be in focus. Adani Ports has got this LOI for a 30-year concession period at the Deen Dayal Port. So Adani Ports is holding up now, up almost 0.5%. JSW Steel, its Q1 production is down by 4% year on year. But the capacity utilization is not bad at about 87%, so keep an eye out on that. Havells has announced an expansion with an investment of 375 crores at Alwar. Kim's has acquired a 200-bed hospital in Vizag for 75 crores. So Kim's is another stock, Krishna Medical, that's up almost 3% right now. RVNL, of course, all of these stocks have been in the news. RVNL has gotten a 190 crore order from Maharashtra Metro Rail. So that's another stock looking pretty good this morning, 5% higher on that. And then you have Mankind and Delivery that are in the news as well. On the downside, Delta Corp, well, because of several reasons, casino operations have not been that great. So Delta Corp is down about 1.5%, and Marathon Next Gen is also another stock that we're tracking. The Q1 area sold is down about 45%. But otherwise for the market, it's honestly not bad. Flat, just holding on to its gains from the last many days, is taking a little bit of a breather. The Nifty Bank is the one exerting a bit of pressure down about 200 odd points, but net, it's not such a bad opening.
Well, that's right, Sonia. A few stocks that are moving around though. RVNL, that's the big mover. It got a 187 crore order from Maharashtra Metro Rail, so that one's up and about. KDDL, they've announced a tender route to share buyback of around 88 crores at a price of around 3,700 crores. So that stock had opened up well in the green. It's up close to around 2% or thereabouts. A few more big movers, from the broader markets itself. MGL, IGL, we'll get to the management in MGL in just a bit, but those price increases clearly have enthused the street out there. And with Bajaj coming out with the new launch, the CNG launch, it seems the street is building in. Maybe there could be some volume contribution from there as well. So you have MGL and IGL, both of them are higher in trade. On the downside, MCX is down close to around 2.5%. IEX is down close to around 2%. Hindustan Copper came out of the ban, but the street preempted that. For the time being, the stock is down close to around 2% or thereabouts. And some of these fertilizer companies like RCF, that's seen a big run. The stock is up close to around 50% in the last 45 days. That's down a little bit in today's trading session. On the flip side, Hemisphere Properties, I'm not sure what's going on there, but massive volumes at the start of trade. The stock is up close to around 6% as we speak. Prashant.
You know, Mahindra is down, right? Is the biggest gainer with a 5% knock. I'm not sure.
Loser, you mean?
Yeah, 5%.
You said biggest gainer.
Sorry, it's 5%. 5%. It's a big cut, right? I mean, I'm not sure if there's any news flow per se, but at about 2,800 now on Mahindra and Mahindra, you know, it's like M&M reversed. It's like Maruti reversed from yesterday. Maruti was, of course, the big gainer. And M&M is cutting losses, but still down about 4%. So outsized one, because the next loser is SBI. Number 2 loser is SBI with a 0.5% cut. So it kind of stands out in that sense. Maruti is continuing its momentum. It's up 1.5%. It's the biggest Nifty gainer right now. After yesterday's 7% gain, it's up another 1.5%. So that registration fee waiver in Uttar Pradesh for hybrids working in its favor. Grasim is up about 1.25%, and there is Eicher and Bajaj which are up as well. So autos definitely on the move, both on the upside and on the downside as well. I just look at the broader market for a quick bit. Mankind, I think we mentioned some of this stuff. Mankind is up 3, RVNL is up 4. RVNL is by far the biggest volume-led gainer with a 5% pop. Stocks at about 570. Nigel mentioned MGL. There is IGL, which is up 3% as well, 539. GMDC is coming up with a 3% gain right now. It'll, at about, 425. Supreme Industries, I think, was a brokerage call, 3% higher. Sud highlighted that. 6,200 on Supreme Industries. CAMS is up 5%. CAMS had a very large move yesterday. So from Monday's close, which was 3,700, 3,800, stocks moved to about 4,200 now in 2 days flat. And actually, not even 2 days, because we're just starting the day here now. Valchand Nagar is up 4%. Vijaya Bank is up just some big volume-led gainers. Nykaa is coming up with a 3% gain. So at about 181, Nykaa has got volumes on it as well. But that's it. I mean, you go down the list, volumes start to dry up pretty quickly. Swan Energy, which was a big mover, which actually has been a big mover all through this year, is down 1.5%. It's got large volumes. There is RCF, Hindustan Copper, National Fertilizer, IEX, GE Shipping. MCX is down 2.33%. MCX at about 37.75. Decent sized volumes to begin the day once again. Sonia?
You were mentioning Supreme Industries, right?
Yeah.
The company that manufactures plastic pipes and packaging products, and that one's doing really well, 2% higher now. Jefferies has a buy call, and they have raised their target price to 6,700, which is still an upside to the current market price. Their earlier target price was 5,390. And they speak about how volume growth for Supreme Industries has been so strong, over 20% volume growth. So this is one of those classic plays on, housing, infrastructure, and the fact that the budget is coming up and perhaps something could be announced there. So, some of these ancillary plays as well.
Just one more stock, Greaves Cotton. We had highlighted in our morning chat the kind of delivery-based buying and the big move that we're seeing. The stock has made a 52-week high. Keep in mind, in the last 1 month or so, it's up more than 25%, but massive volumes in the first 3-4 minutes of trade itself. 52-week high on that one.
I mean, it closed last month at 125.
Yeah.
And 175 now. I mean, so that's a pure momentum mover. Big volumes as well for this point in the day, as Nigel highlighted. Well, Manish Gonwani is our market master today. He's Chief Investment Officer at Bandhan AMC. Manish, good morning. Good to have you with us here. Thanks for your time. I mean, I think, mutual funds are all smiles, right? Big inflow.
Nothing to complain about.
40,000, 43,000 crores and SIP book growing. This is the best of times we've had. Manish, just give us a sense of what you're doing with the flow, though. That's the other part, right? Because all of that money is going in. You can't sit on cash.
Yeah.
And you got to put it to work. So are you expanding the universe beyond what you would traditionally look at, to look at maybe smaller companies and ones where there is some not just the large caps or the top 100, 150, 200 names in that sense. Are you forced to do that, Manish?
We're not being forced. Actually, we've always been of the view that structurally the small cap space is the most interesting space in the market. Now, of course, after such a strong 1 year, if you have a short-term time frame, you should be a bit wary of small caps. But if you have 3-5 year kind of view, essentially our view has been that between the themes of high liquidity, the kind of change we are seeing globally and in India, and the fact that overall macro growth, I don't think will be great globally. If you combine these three big themes, I think we will reach a conclusion that large caps may struggle to report any strong earnings growth, whereas a lot of selective small caps, which play on themes like energy transition, China plus one, consumer discretionary affluent, and luxury consumption. A lot of the small caps in these spaces, I think, can compound earnings very fast. And given the high liquidity, I think that's the space which will generate alpha.
Okay. Manish, hi, good morning and thanks for joining in. Absolutely right, no complaints for this market. But what do you see as the trajectory over the next 1 to 2 years? I'm asking because this market cannot go up endlessly. At some point, a correction has to come. Do you think, if not a price correction, there could at least be a time correction which would allow this market to fall into that range of 12 to 13% gains that we've seen on an average for so many years, right? So correction to a mean, so to speak. What is the best way for a retail investor to look at it?
No, you're correct. Logically, that's what should happen. It's taking some time, but I think that even if everything else remains superb in terms of macro fundamentals, corporate earnings, we have to remember that equities can't generate excess return over fixed income beyond a point, because at some point, capital will then start flowing to equity so much that the promoters and the private equity funds and global companies will come and supply. So we're seeing, for example, a big auto OEM globally is coming and listing in India because valuations are high. So just because liquidity is high doesn't mean that market will give you opportunities to make money so easily all the time. So yes, I would think that you should be realistic about returns. Next 3, 6, 9 months, markets can be flat, may have a minor negative drawdown as well. But I do think that, again, if you talk about 2, 3, 5 years, given the liquidity, that it is a stock pickers thing in small caps, that if you can find companies that play on big trends and have management that can execute, I still think that good stock picking will get rewarded.
Hi Manish, good morning and good to see you. And since you briefly mentioned autos, I recall you being positive on PVs as well as two-wheelers, if I remember correctly, not so much on CVs. The top gainer on the Nifty currently is Maruti and the top loser is Mahindra & Mahindra. What's your preference from the basket as of now?
No, so in general, I think two-wheeler stocks have done well, and we should remember that this is a fairly penetrated category. So as a fund manager, I don't see too much upside in two-wheelers. Bit of change of view on CVs. I think I'm more positive now than, let's say, 3-6 months back, because see, usually what happens, CVs have a very severe down cycle and then they recover. But I think in this current cycle, they've got a consolidation phase which has lasted. And end of the day, you're looking at the market relatively. So I'm not saying that CVs are a great distressed valuation, but related to a lot of other capital goods and cyclical companies, today CVs don't look that bad. I think four-wheelers is a bit of a stock pickers thing. I mean, there are a lot of policy changes happening. Maybe auto anchors are a better way to play, because the pace of EV adoption is not very clear at this point of time. And in a lot of OEMs, you then have to choose based on who's got the better EV portfolio, etc. And given the uncertainty around how fast EVs will get adopted, OEMs are a bit of a tough choice at this point of time. Auto anchors have also done well, so nothing is cheap, to be honest. But if you want to do buy and hold patient investing, I think auto anchors in general are better than OEMs.
So, you know, for M&M, right? I mean, of course, the stock has had a very strong run in the last 1 year. Let's not forget that. But remember, yesterday, M&M cut prices of one of their popular SUVs, the XUV 700, prices were cut by 10% from 21.5 lakhs to 19.5 lakhs. So a lot of analysts say that this signals demand weakness. I mean, so perhaps that could be one of the reasons. But in any case, the stock has also seen a big appreciation. If you look at the last, not the last couple of months, but if you look at the last 1 year, it's been a phenomenal run there. So Manish, for just a follow-up before we move on to the next sector, for companies like M&M, where maybe there is valuation discomfort now, and perhaps there's some demand weakness as well. Do you think that the time has come to churn out maybe into other pockets like commercial vehicles? Just trying to understand how to move in this space.
So I can't answer for a single stock, but as I said, in general, my view is large caps across, whether it be autos, capital goods, financials. Given that globally GDP is going to grow slower and slower, India will obviously be a relative outperformer, but if global GDP is not going to grow gangbusters, you can't expect very strong cycles to happen in India. So you have to play these small cycles that happen. In that sense, as I said, at this point, auto OEMs, which have done very well for last 12 to 18 months, I don't think there's any big value there, honestly, unless as I said, you're able to pick a policy direction on, let's say, EVs and choose a OEM that rides on that policy direction. It's a bit of a risky call. But apart from that, I don't think there are any secular growth at a reasonable price kind of ideas in autos at this point of time. So I think the more powerful theme is energy transition, which is a global theme. The addressable market is higher, but there also stocks are not very cheap. But these are themes you have to keep churning. I don't think this is a buy and hold market. Clearly, valuations across the board are not cheap. Clearly, as I said, you're not going to get very, very strong growth in credit growth or auto sales. So you need to churn your portfolio wherever there is a bit of pessimism. So as I said, I just see some relative pessimism on the CV cycle. And a small bet there may make more sense today than the passenger side.
Okay. Well, point taken. Some of these holding companies, Chola Holdings, for example, is up about 6%. And we've, Bombay Burma and some of these other holding companies have been doing very well. Chola Holdings will come up. It's got large volumes on it. That's the mover today. CESC, the tariff adjustment higher happened yesterday. It's up another 3% this morning. So there are follow-throughs in Maruti and CESC, the two big single stock movers from yesterday's session. There is Manappuram, which is in the mix now. It's up 3.5%, 214 on Manappuram. Was not there when we started the session. And of course, the railway, RVNL, IRFC is another addition. IRFC is up 3, is the second largest volume traded name. And of course, CAMS remains higher by about 6% or so at this stage. These water companies, water purification companies, Iron Exchange, 4%, Viatech Vabag is up about 2%. So some more stuff which is showing through. Jewelers is another pack. Yesterday, Senco was down 5%. Senco, of course, at the business update, we had the management with us. But others like Kalyan and even a smaller old name, TBZ, Tribhuvandas Zaveri, these were large movers yesterday. I can spot Kalyan, which is up about 3.5%. So there is, a fair bit of activity which is coming up. Manish, for those who are doing it themselves, and of course, there is enough money being handed over to mutual fund managers. But as you say, this is not a buy and hold market; it's a buy and sell, and then buy again kind of a market. So you jump from pocket to pocket, trying to find that relative underperformance or relative valuation comfort. So apart from what you mentioned, any other pockets where you find that?
So the 3-4 themes which we like are real estate, pharma, the energy transition, capex. IT, I think, is not too bad, although I'm not very positive, but being underweight IT any longer doesn't seem to make sense. So yeah, these are the pockets where we see relative valuation.
Okay. All right. We'll leave it at that. Thank you so much for joining us. Appreciate your time here. By the way, as we were speaking to Manish, just wanted to get a quick update on what's happening in the market as well. It's not doing too much, to be honest. It's very, very quiet. Just consolidating its gains of the last many days and catching a breath, taking a pause. I think that's the need of the hour. It's been relentless, the pace over there. But let's do one thing. Let's talk about Mahanagar Gas now. The company has hiked CNG prices, remember, by 1.5 rupees a kilo for CNG and 1 per SCM for PNG. The company says the price hike was due to shortfall in domestic gas allocation. To discuss this and more, we have Ashu Shingal, who is the MD of MGL, who joins us now. Ashu, thanks a lot for joining in. Appreciate your time here. I just want to understand what is the reason for this price hike, and with spot LNG prices going higher from here, are we staring at more price hikes by companies like yours? And between domestic and imported gas in terms of raw material sourcing, if you can also help us with what is the split currently?
Yeah, the price hike is mainly because of two reasons. One, that the APM gas allocation has come down substantially over the last 1 year's time, as well as the price of LNG has gone up. So we were getting APM gas, which is at $6.50. From 82%, it has come down to 68%. So there is substantial reduction in the APM gas, which is the domestically available cheap gas. And the LNG prices were earlier down, but now it has started increasing again. So we are constrained to increase 1.5 rupees in the CNG prices. However, still we are the cheapest in the country in terms of CNG prices and PNG prices.
Okay. Mr. Shingal, hi, good morning. Prashant here. So could you tell us, do you anticipate any impact on volumes? You say you're still the cheapest, so I'm assuming no. So what's your volume growth outlook for this year? And what about margins, sir, EBITDA margins? What will this do to margins? Will you be north of 10 rupees per SCM?
Yeah, the volume growth is expected to be better this year because overall the population of CNG vehicle is increasing, as well as the CGD infrastructure is also improving. So last year, year on year, we have clocked a growth of around 5.5%. This year, we expect to be more than growth year on year. 24-25 will be more than 7% higher. Regarding what was the other question? Sorry.
Margins, sir. EBITDA margins.
Earlier last year we were 9.5 rupees per SCM. This year it was 13.5 rupees per SCM. I mean year on year. However, going forward, you are right. Maybe we will clock around 11 rupees or 10 to 12 rupees could be the new guidance which we can expect this year.
All right. Hi, Mr. Singhal. Good morning and thanks a lot for joining in. You know, we had a new bike, a CNG bike that was launched from the Bajaj Auto on the last Friday itself. And some on the street believe this could throw up an opportunity. Have you done any back of the envelope calculations? What kind of a volume boost could it be, say, in the next year? Maybe this year may not be too much, but in FY26 onwards, do you think it could boost up your volume substantially?
Not really, because the per bike consumption, the cylinder capacity is only 2 kg. So to see any significant increase in our volumes, the number of bikes should be very huge. So it will take some time. Maybe next year we will get some volume, maybe 2-3%, and afterwards it can increase furthermore. But definitely it will take some time to, one, that people are getting used to the new bike, although it is definitely much more advantageous in terms of running cost. As far as Mumbai is concerned, we expect that running a bike on petrol versus running a bike on CNG will be around 40% the cost of running a bike on petrol. So there is substantial saving on running cost. And even the capital cost is not expected to be very high in the petrol bike. So we think this will be going to be a very good segment. And we will be in talk with the Bajaj. Already we are in discussions with them to see how we can help their initiative, because we appreciate this is an excellent initiative to give common men and to people in large who are using bike a very good advantage of a very low running cost.
Okay, all right. The other big event that we're looking forward to is Budget 2024. Is there a possibility of excise duty cut on CNG in the upcoming budget?
We are hearing that, but we don't know for sure, because unless the budget is passed and what is included in the budget or not. The other point which we are hearing is maybe the gas can be included in GST. Because if that so happens, then excise duty cut will not be required. It will be one tax regime for the gas segment itself.
So if it's included, then what kind of a benefit is it for you? You know, if the second part happens, gets included under GST, then what kind of a benefit it could be for you as well as for the industry?
For MGL, it will be a pass-through because any tax is not on our account. It is passed through to the customer. So customer segment, industrial and commercial particularly, will get benefited in terms of they can, if their input tax credit which they get and their product is under GST and the raw material is not under GST, then they don't get input tax credit. So maybe they will, product price will be, they can get some benefit there. MGL, it will be a pass-through. For PNG segment, it can slightly increase the prices because PNG cannot take any, because currently the VAT in Maharashtra is 3%. So if gas is included more than 3%, then maybe there can be some increase in PNG prices.
Mr. Shingle, just to go back to that earlier point on the bike, right? But so, for example, we've had this new bike, CNG bike, and maybe others will also launch bikes. We had UP, for example, which has made registration fee for hybrid vehicles, waived off the registration fee. My point is, and CNG is an important segment, right? Almost 3/4 of your business volumes are CNG. So will this push the network expansion, more CNG stations, etc.? Could you give us a sense of how that is likely to come through? And what are the volumes what kind of volume growth are you expecting for that segment? It's small right now, the bikes per se, but if there is a sustained push all across, could this quicken the pace there?
Yeah, it will take some time. I mean, the volume growth will take some time because of the impact of the bike only, because around 3-4 lakhs three-wheeler auto is there, and three-wheeler auto takes around 3.5 to 4 kg, around 3 kg per fill, whereas bike will take around 2 kg per fill. So double the numbers will give us maybe 10% volume, but then the numbers of bikes should be around 7-8 lakhs, which will take a substantial period to come to that number in Mumbai or in our geographical areas. CGD infrastructure, any which way we are going to increase, because this year we are planning to put up around 85 stations, including Unison 30 and our stations put together. So we are anyway going to increase our CNG infrastructure, either the bike is there or not there. Anyway, it's going to add one more segment, which is a very welcome thing for us, company like CGDs.
Got that. What about the other two segments, sir, of the industrial segment, which is about 10% of volumes? How is that likely to grow? Any triggers there?
Yeah, industrial segment, last year we have grown by 12%. This year we are expecting more than 10% once again, because new infrastructure is getting created in Navi Mumbai, Thane and Raigad, plus Unison also. So we are adding more industrial areas into our catchment areas. So more segment is expected to be added. Plus we have designed our contracts more user-friendly, customer-friendly. And the pricing also is done as per their alternate fuel pricing. So we think that the segment in industrial and commercial both will grow more than 10% this year.
Okay, we will leave it at that. Thank you so much for joining us and speaking to CNBC-TV18. That's Mahanagar Gas. The stock is actually up almost about 4% and has been one of the big movers in the last many days. But let's slip into a quick break. On the other side of the break, Rajesh Gupta of Lloyds Metals and Energy will be joining us as the company raises 4,178 crores through the QIP route and preferential issue. Stay tuned on that.
Welcome back. Well, as promised, let's get straight to the management of Lloyd's Metals and Energy. Well, the stock has been one of the big outperformers. You know, in the last 3.5 years, the stock is up 35 times. Let's get in Mr. Rajesh Gupta, the MD of the company. Hi, Mr. Gupta. You know, when you talk about this bull market, this stock definitely comes to mind. Imagine you had a market capitalization of around 1,500 to 2,000 crores just a few years ago. Today, from the market, you're able to raise more than that amount. And that too, diluting less than 5% of the total market capitalization. So that's telling you the kind of run that we've seen. And to be fair, you know, the performance of the company has improved as well. So even if I consider last year's 1,800 crores of EBITDA, you're trading at close to around what? 18 to 20 times. So clearly the street is building in much improved performance from here on. Let's get straight to that. You're talking about, you know, forward integration, ramping up pellet capacity, iron ore capacity, as well as becoming a full-fledged steel company. This 4 million ton plant that you're talking about steel, how much of it is, by when do we see the 4 million ton plant? And what is the total capex that you're looking forward to?
Nigel, thank you for having me on CNBC. And thank you for the congratulations for our fundraise. It's one of the biggest fundraisers in a group of two issues. One is the QIP of around 1,200 crores and the 3,000 crores through pref cap. Out of the pref cap, around 1,000 crores is being contributed by by the promoters, showing the confidence that we as promoters continue to have in the business and the valuation of the company. Number one. Number two, you mentioned about the spurt of the share prices. That's something that the street knows better. We as steel makers and iron ore miners have to do our hard work. Like I always say, I'm a lower. Balance aapko dekhna hai. Regarding our going into the steel cycle now, like you know, we are already at 10 million ton capacity, and a part of our investment cycle includes beneficiation of our ore from BHQ ore from 35 to 65% Fe. That would raise our total output over 3-4 years. Ultimately, more of BHQ beneficiated ore, but immediately, hopefully from next year, it should be around 25 million tons we should be producing. And with that, we want to capitalize and take advantage of that to make steel. Like we all know, India has to produce 300 million tons. The Prime Minister's vision is very clear, and any growing economy needs a lot of steel. Right. The 4 million ton investment of steel itself would be in two plants. One would be at Chandrapur, which is a 1.2 million tons. In various stages, it will start by next year, and by July 26 or so, maybe September 26, that 1.2 million tons should be commissioned. That's a wire rod plant, the first in Maharashtra. Simultaneously, in the other location in Gadchiroli, which is very near the mine, where we have started the first industry in that district in the last 30 years already. We'll be starting up 2 pellet plants. Again, one will be starting up in by the end of this financial year, and that's the first pellet plant, and the second would start by the end of the next financial year. Okay. And subsequent to all of these investments, we are planning a 3 million ton flat products steel plant in Gadchiroli. The total capex cycle, so that 3 million tons is very modern. We hope to have a very modern plant with the maximum green possibility, especially because of our beneficiation. And we hope at least 20% over lesser carbon footprint over other manufacturers because of the iron ore being very rich.
Okay.
And,
Mr. Gupta,
yeah. So
Mr. Gupta, this 3 million ton plant, by when will it be commissioned?
That will be around 28, 29, sir.
28, 29. Got it. Now let's get a few more details. You said your iron ore capacity moves from around 10 million to around 25 million. So for the next year, this is FY25, you had made a request, I think, to increase the mining capacity as well. I was looking at Requeris note. They are talking about 15 million tons in the coming year. And then they're saying you ramp up to around 25 million tons. So should we read that 15 million tons in FY25? And from FY26 onwards, it will be 25 million tons per annum. We're only talking about the iron ore mining for now.
I wouldn't want to give a guidance exactly, but we hope to get that enhanced capacity in iron ore mining by the end of this calendar year, maybe by January. So we can do some pro rata tonnage out of the 25 million tons in the last two months of the financial year. So whether 12, 13, 14, that depends on various factors, but definitely we are geared up for that.
Okay, and you get the total enhanced capacity to 25 million tons by FY26?
Definitely, we hope to do that. We have performed similarly when we went from 3 to 10 million tons. So we hope to get the permissions by that time.
Okay, now this entire capex, 12 million ton of pellet, 4 million tons of steel, hiking up the iron ore capacity to 25 million tons, beneficiation plant as well. What is the total capex? I think it's around 30,000 crores, right?
That's right. Around just little north of 30,000 crores.
A little north of 30,000 crores. You have raised close to around 4,000 crores, including the promoter infusion. So all of this 30,000 crores will be funded via this funding that you have already raised and internal accruals as well, because you want to be debt-free at the end of by 2030. Is that correct?
Our resolve to remain debt-free is very strong. And with the support of the markets, we definitely will do that. And we hope that this fundraise would help us to reach till the end of the total capex cycle that we are now proposing.
So no more fundraise is what you'll do?
We hope not to, sir.
Okay, and what about this 1,000 crores that you will be putting in as your part of it? Some part of your shares appears to be pledged. So will you be pledging your current holding to fund that, the warrants that you will have to honor?
No, the pledging is, we are like, two promoter groups. So some of the pledging may continue, but we hope not to pledge further shares now.
Okay, no further pledging. Got it. Also, a quick question. You have given us the number of, it could be 12 to 15 million tons for this year in terms of iron ore on an EBITDA per ton, but you have an edge. And that's something that the street likes. What is the rough EBITDA per ton on the iron ore that we should be looking at for this year?
Last year was around 1,800 rupees per ton. Given the market, because we have had ups and downs in the price because it's a cyclical industry, I would expect around 2,100 or so. But again, it's not a guidance, but just the trend that we are seeing in the market, in the iron ore market in India.
Okay, all right. Final question then. We need to ask you about Sunflag as well, because that's another listed company. They already have a large chunk in the company. And I think you know what's my next question, Mr. Gupta. They have gone ahead and they want some warrants. They have gone ahead and they will be taking some part of those warrants as well. I think they're going to be going in for close to 27 lakh shares. What's the ultimate plan with regard to this entity? Have you had a word with them? Do they want to take their shareholding up in Lloyd Metal, the listed entity? And is there a possibility that ultimately you merge both these two entities because they'll have more than 12% in your listed entity?
With the 27 lakhs infusion, I think the percentage of equity would remain 11% or so, little lesser than what they have right now, of fully diluted equity. We have no plans to and had no talks with them or with anybody for any merger whatsoever.
All right, got that. A great conversation, and I love that line. मैं तो लोहार हूँ, market, stock price. Thank you very much, sir, and
thank you,
for patiently answering the questions. Well, I think 60 points lower, 24,375 is where we are at. And we are actually, market breadth is now significantly negative. That is the one change. There is some profit booking which is happening in the broader market in a not in a very large way, but lots of stuff is down between 4-5% now, and about 1,500 stocks are down. There's about 900 stocks which are higher. So it's kind of turned over the last 10-15 minutes or so. And there is more down than up now. But it's also time for our special segment, Quarter Se Quarter Tak. We get you earnings expectations from from a different sector every day. And today it's a turn for banking in Q1. Abhishek is here with expectations. Abhishek, morning.
Morning, Prashant. So banking sector's Q1 FY25 will be about the outlook that the management gives out with respect to how they see growth ahead in terms of deposit growth, because deposit growth is slowing down for the system as a whole. As on 14th of June 2024, as per RBI, the year-to-date deposits have actually declined by rupees 3.5 lakh crore, or about 1.65% decline. So hence, deposit growth is the biggest challenge for the banking sector as of now. Loan growth as on 14th of June 2024 as per RBI data was at 19.2% on a year-on-year basis, which includes the SDFC Limited numbers which have been merged with SDFC Bank, and around 1.7% with respect to quarter-on-quarter loan growth that we have seen for the industry. So cost of funds will continue to impact the net interest margin for the lenders. Hence, expect the net interest margin to decline for majority of the lenders. Banks will continue to lose out on the low-cost deposits, that is current account, saving account deposits. Hence, CASA ratio is seen at the lowest for many banks in years, as much as the lowest that they are seeing in last 8 to 10 years. That is why, with decline in net interest margin and lower treasury gains, expect the operating profit growth to be on the slower side too. So barring seasonality, asset quality is not much of a worrisome factor for the lenders in Q1 FY24. However, FY25. However, watch out for the pain coming in from the microfinance or the rural segment for the lenders. So recovery from bad loans had been driving the earnings momentum for PSU banks largely. Now it may be on the muted side in Q1 FY25, and that can actually have an impact on the earnings of the banks as well. Having said that, the best of return ratios is clearly behind for the banks. Now key estimates coming in from Kotak Securities are, for SBI they expect NII growth of 8.6% YOY and about 1.5% sequentially, while they are expecting the profit of SBI to decline by 10.6% YOY and 27.1% sequentially. So for Bank of Baroda, Kotak Securities estimates NII to be up 5.3% YOY and a decline of 1.8% quarter-on-quarter. Net profits are expected to be up 0.7% YOY and a decline of more than 16% quarter-on-quarter. Now for SDFC Bank, I have taken only sequential numbers because of the merger of SDFC Limited with the bank. So they are expecting NII growth of 3% on a sequential basis, while net profit to decline by 2.7% quarter-on-quarter. For ICICI Bank, Kotak Securities estimates NII to increase by 5.2% YOY and about 0.4% sequentially, while the profits are expected to be up 8% on a YOY basis and a decline of 2.5% sequentially. For Axis Bank, Kotak Securities estimates NII growth of 8.9% YOY and a decline of 0.5% sequentially, while net profit is expected to be up 4.2% YOY and decline of more than 15% sequentially. Back to you.
Okay, thanks a lot for that. Well, Samir Bhise, the banking research analyst at JM Financial Institutional Securities, is joining in now. Samir, hi, good morning. All eyes are going to be on the banking sector, right? Given the kind of momentum that this space has seen in the last couple of months and the leadership that it has assumed once again. But you tell us, what are the key highlights of this sector? And between private and PSUs, how are you positioned now? Samir, I think you're on mute.
Yeah, hi. Sorry.
Yeah, go ahead.
Thank you. Thank you for having me on the show. So I think price action aside, we continue to see slightly challenging environment on the deposit side for the sector as a whole. And it has prolonged for a reasonable bit of time. In that context, I think it is important to see that how revenue growth, that is NII and fees, translates into PPOP growth for most banks. Our view, first half is likely to be largely soft on a PPOP growth perspective. And probably towards the second half of the year, when the high margin base of last year is not there, we should see some bit of respite on a PPOP growth perspective. So if you ask me on the near term, maybe this quarter and the next, you should have some softness in numbers. Which is why we remain slightly cautious on the sector as a whole. Large private banks, especially ICICI Axis, relatively better placed with respect to growth as well as margins. HDFC Bank, while the numbers were soft, we think the worst of margins should probably be behind, and it will probably remain range bound in the near term. Overall, I think deposit growth is what we are watching. Also, on the asset quality side, Some initial signs of inch up on credit costs for spaces which are now widely known, maybe a bit of microfinance and as well as some bit of inch up in unsecured. So I think that will effectively drive higher credit costs, lower margins. So the only lever which probably most banks have is towards operating expenses, which were running high for last couple of years. Some moderation there will be utilized to protect the ROA levels. That is how we are seeing the overall space.
Okay. What is, in terms of the valuations, how are the valuations stacked up now, even if there is some moderation, even if profit growth is slower across the sector, right? Do you think there's enough valuation headroom for stocks to move up in the private sector space?
So in terms of valuation headroom, I think I would agree that valuation downsides are limited given the rest of the market has moved the way it has. So this sector probably stands out where valuations are close to long-term averages. But we are of the view that the valuation is there for the right reasons. You will need respite on the macro front, especially deposit growth, which effectively drives your potential credit growth. For stocks to re-rate, you will need improvement on that side.
Got it. That's the listing, by the way, for MCure. And I think the listing has happened at about a 30% premium on top of the issue price for 31%. The other one is Bansal Wire, which has also made a debut on the stock exchanges. So two listings today. Bansal Wire is up about 40% on the issue price, and MCure Pharma is up about 34-35% now. And significant volumes, half a million plus shares on Bansal Wire and about 300,000 shares on MCure, which of course was the more high profiles. Both were of course subscribed well. MCure was subscribed some 70 times on an overall basis, and so I mean, it's a decent start coming through. Eddie, Samir, hi, good morning. Now across your coverage universe, banks, non-banks, etc. By the way, you have a new initiation as well, right? Muthoot Microfinance, where you've sort of initiated coverage with a buy, etc. Give us some ideas, Samir, around earnings, beyond earnings.
So I think
yeah,
we continue to like ICICI Axis in terms of numbers and valuations where they are stacked. ICICI has been the sector leader so far and should remain the way it is going right now. We are happy to see mid-teens or low-teens kind of PPOP growth for both these names for the full year, which itself puts them in a relatively strong position versus other sectors. Some of the smaller banks, we are still watching the credit quality on how credit costs shape up, as there are initial signs of some bit of inch up in credit costs, and we will see where they settle over the next couple of quarters. But broadly, if one has to ask that when the sector probably goes back to the valuation upsides that they had seen earlier, I think it is still some time away in my view.
Outside of these two names, anything else?
We like SBI too. I think on the PSU banks back, I think so far remains the best play.
Okay, SBI, got it. Now for SBI particularly, right? I mean, it's been almost a 15% gain that SBI has seen in the last 3 to 4 months. In terms of valuations in the PSU banking space, is there a lot of legroom for SBI compared to its peers?
So I think one has to look at it in the perspective that ROA has been expanding. And even if one were to adjust for the recoveries and write-backs that they have seen from past book, the core ROA is also inching up. So to that extent, SBI now suddenly has a growth upside vis-a-vis what is happening in private sector banks. So they can continue to grow at 15-16% and also drive 1% plus ROA, which puts them in a reasonably strong shape. And hence the valuation re-rating can be justified versus what was the recent history.
Okay, Samir, we'll leave it at that. Thanks a lot for joining in. Appreciate your views on the sector and how to approach it. Well, let's do one thing. Let's take a quick commercial break. On the other side of the break, we'll put focus on the commodity markets. Manisha Gupta is joining in. Stay tuned. TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key news makers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
I think it is not euphoria, it is like a stampede in the market. You know, even here in Ahmedabad, whoever I am meeting who is not at all related.
Welcome back. Let's get a quick run through on what's happening in the markets. It's actually not a bad day. It's a little bit subdued, down about 0.2%. Little bit of pressure on the index, down about 65 odd points, but par for the course really, given the kind of trajectory that we've seen lately. Mitesh Thakkar is joining in now to tell us how to approach the markets. Mitesh, it's been a phenomenal run. A lot of milestones have been hit. But for the rest of the day, what are you penciling in and what are the stocks that one needs to look at?
Yeah. So I think, yesterday as it made a new high, the Nifty, I think it did surprise me because there was lack of momentum and I was suspecting that the new high may not last and we might actually get a dip. So that's playing out. Now the first support of 24,350 is right there. In case you break that, I think another 120, 130 points could happen in the next 1-2 days. So below 24,350, expect 24,240 thereabouts. And in the worst case scenario, we might even test 24,180, 170 zone. So I think the market could give some kind of a pullback is my overall feeling. Therefore, we are looking at now exiting long positions and exploring some shorting opportunities. EU Bank is one name which is looking weak, so that's a sell. Keep a stop at 642. Look for targets of roughly around 610 to about 605 on the downside. And after a long time, after a good rally, Coromandel could also give some kind of a pullback. So sell here with days high of 1617 as the stop loss. Look for 151020 as your pullback.
Okay, all right, Mitesh. By the way, Mitesh, in the broader market today, right? I don't know if you're seeing there's a fair bit of pressure, a lot of pullbacks, well traded names, which are down 3, 4, 5%. I mean, I can spot at least 25, 30 names already with decent sized volumes.
That's right, Prashant. In fact, the entire pack, which is the mid-cap pack and the PSU banking names, and we've had sell calls on Canara Bank and Bank of Baroda earlier. I think the entire pack looks like it's extremely overbought and now is ready to give a pullback. The intraday indicators are suggesting some kind of a mild breakdown. Therefore, I think next few days could be slightly on the negative side. If people have, this is a good time to take profits and exit long positions. If somebody wants to short, I think, we've been giving stop losses and calls with targets, etc. I think those can be followed. But the overall feel is that next couple of days could be more on the corrective side for the space, which has done very well in the last couple of weeks.
Okay, well, thanks a lot for that. Let's do one thing. Let's focus now to the commodity markets. Manisha has been waiting by. Manisha, what's the one commodity that we should be looking at today?
So now I'm looking at the soft commodities.
pardon me, the latest FAO data also shows that the industrial agriculture commodities also have kind of softened in the month of June there. Of course, there has been increase in vegetable prices within India. Vegetable oil prices, sugar and dairy products have seen an increase, but various other important essential commodities actually have seen a decline in the last 1 month or so. I will start with vegetable oil itself, and palm oil prices is one which has seen slight rise in prices. There is firm demand from India and various other countries, and the biofuel sector also seems to be supporting demand from this one. Rice is something that has seen a constant decline in prices. In the international markets, we have the prices trading at a 3-month lows. For the Indian markets as well, there is a surplus now, and with the kind of sowing that India has done, the expectations are of a bumper rice crop, and the government is looking to take off some of that stock that they have. So this is one thing that seems to be impacting the international markets as well, that India could be lifting export restrictions by the time you are looking at end of July. The new rice will start coming in from the month of October. So that is what the world is watching at. For the global markets also, it's higher supplies, lower demand, and the world agri supply and demand estimates, if you look at those numbers, also do show that you are looking at stronger numbers there. We are looking at nearly a higher number in sense of 3% when it comes to year-on-year basis. Not just rice, cotton prices in the international markets are trading at a 4-year lows now. There is favorable weather in the US markets. Indian prices right now are trading at a 2-year lows also. And weak export numbers is something that continues to weigh on. Also globally, 2024-25 as a year indicates an increase of nearly 90,000 bales of an excess in the international markets. That is keeping those prices in check. Moving on, you have sugar prices, which also are trading below 20 cents here. The strong monsoon that you have seen in Brazil, Thailand, India does indicate that we are looking at a better crop this time around. Brazil actually is looking at much higher a crop as compared to the previous year. Output is estimated to increase by 1.3%, and India is looking at a sugar surplus of 3.6 million tons. All of those factors keeping the prices in check here as well. The only thing that perhaps is seeing gains has been the coffee prices. We are trading at a 2-year highs onto this one. Vietnam coffee exports for the month of Jan to June have seen a very sharp decline of 10%, and below average rains in Brazil also seem to be keeping the prices higher. So if you keep coffee aside, almost all other soft commodities have seen a decline for the month of June, and July has started on a weaker note as well. If you look at the last month prices, we've seen soybean decline 1.5%, sharp cuts coming in for cotton. Ditto is the case with rice as well. If you look at the sugar prices, well, that saw some gains in the month of June, up by nearly 5.5% onto that one. Coffee, of course, is a gainer, as I told you, up by 12%, but almost all other commodities trading in the negative on a week-on-week and a month-on-month basis.
All right. Manisha, thanks very much for that. That's a commodity update. RVNL was one of the top traded stocks with volumes. It is actually 8% higher. Vivek is here to tell us why. Vivek.
Well, in an otherwise weak market, RVNL, has been the standout. So what's actually happened is that some time ago, there were talks that India, especially as far as the rail corridor is concerned, India will be present both in Middle East as well as the African nations. So there has been one MOU that RVNL has signed. Number one, they've gone ahead and signed an MOU with a company called Tatweer Middle East and Africa LLC. Now, this particular MOU will be using RVNL's expertise in railway sector, where RVNL, will assist the company in joint design and execution of various rail-based work in the MENA region as well as European countries. Right now, it's just an MOU. Also, there's another bit of development that RVNL has informed the exchanges about. They have received an LOA from Nagpur Metro for construction of 6 elevated metro stations. Order size is close to 187 crore. Our time period for construction is close to 31. Some positive news flow for RVNL, keeping the stock up to date.
Okay, thanks a lot for that. And if you're wondering why M&M is under so much pressure today, automakers like Tata Motors and M&M have gone ahead and cut SUV prices across their SUV range. So M&M has cut XUV 700 prices by 10% from 21.5 lakhs to 19.5 lakh rupees. Tata Motors has cut the starting prices of Harrier and Safari till the 31st of July, cut the prices of Harrier to 15 lakhs from 15.5 lakhs earlier, and Safari prices have been cut to 15.5 from 16.5 lakhs earlier. Now, analysts say that this signals demand weakness in the SUV space, and that is a big concern now. Apart from that, if you look at it, demand in general has been under pressure in the passenger vehicle space. There was a notable decline in June. So if you look at the FADA data, PV industry sales are down 7% year-on-year and 7% month-on-month in June. But what's going wrong in the sector? One thing, of course, is the extreme heat has resulted in a 15% decline in the walk-ins in dealerships. So that is one thing. Then, of course, the monsoon delays, etc., impacting rural areas. But dealer feedback highlights challenges like low customer inquiries and postponed purchase decisions in the passenger vehicle space. And to top it all, stocks like M&M have rallied quite a bit. So if you look at the valuations, M&M is now trading at 22.5 times FY26 PE. So slowdown in demand along with valuation discomfort is what's causing a 6% knockdown on that stock. But let's do one thing. Let's take a quick break. On the other side, Lata will get chatting with Nishchint Chavate of Kotak Institutional Equities to put focus on the NBFC business updates and the Q1 earnings. Stay tuned.
Market and from different walk of life, different field, business wise, career wise, and everybody's talking about stock market only, that they want to trade, they want to make quick money, and they want to break their FD, and they want to. Somebody was telling me yesterday only that he's working in some IT firm and all, and he want to quit and again join stock market and all. So I think that this situation is not. Personally, I may be wrong because I have been proven wrong many times in the past. But I think this will not end well. So SEBI should take very strict action to curb this kind of frenzy in the market or stampede in the market. Now the pricing power is coming with all these telecom service providers like Jio has already increased the rates, and Bharti also has followed the suit. And same is with Vodafone. Numbers 15 players has shrunk down to only 3 players, and BSNL is 25% players, so 3.5 or whatever you call it. So, and one thing is the for sure. Now, earlier we used to talk about in India roti, kapda or makan. So now this is roti, kapda, makan or mobile. As I always say that even my driver keeps 2 mobile. I keep only 1 mobile, but my driver keeps 2 mobile. So how can you go wrong in all these things in this telecom? I think now since they have started increasing the rate and
we continue with our quarterly results review. You just heard about the banks. Now on focus are NBFC companies. Early numbers from companies like Bajaj Finance have shown a very strong growth in loans. Companies like MMFSL have, on the other hand, shown stress in the form of lower collection efficiency. So what are the retail credit demand trends for the sector as a whole? Will they show margin pressure due to higher cost of funds? And what about the stress that we hear in unsecured loans and microfinance come in pockets? For all these questions, I am joined by Nishchint Chavate, the Director, Kotak Institutional Equities. Good morning, Nishchint.
Thanks.
Pleasure having you with us. Well, for starters, overall, I'm reading from your own report, you're looking at very strong credit growth in companies like Bajaj Finance, Cholamandalam, etc. So good in terms of top line, would you say?
The answer is in terms of loan growth, yes. But a large part of it also comes in because of the run rate that you have been doing over the last couple of quarters. I think from a disbursements point of view, typically 1Q seasonally has or tends to have some element of weakness, which our sense is may be there this year as well. In addition to that, there have been sound bites about excess heat wave or, for that matter, election-related kind of a little bit of weakness in collections, and which is where first quarter could be slightly soft in terms of disbursements. On loan growth, I guess it kind of starts playing out over a period of time. Now the question is whether this is a seasonal weakness or is it something which is an early sign of some kind of softening of demand. I think, as you rightly mentioned, in your opening comments, that there have been pockets of stress. So the question really comes in is that, for the secured lenders that, typically we have coverage on, whether this is an early sign and it's going to spread to the secured ones, or is it something that any disbursement weakness in the secured ones is just going to be a function of a seasonal trend. I think that's something that is going to be very crucial in the management commentaries.
Okay. Well, actually, we just saw Sonia, my colleague, highlighting that people have dropped SUV prices, Tata Motors and M&M. Therefore, is there a worry that overall loan growth might taper off? What is the loan growth picture generally, and which companies would stand out?
What happens, especially with retail credit, is that loan growth, disbursement growth is a leading indicator. Loan growth kind of starts getting, or it's essentially a lagging indicator. So it starts getting reflected over a period of next couple of quarters.
Okay.
So we, in terms of absolute loan growth, I think we'll come to know over a period of quarters. Disbursements growth may be slightly soft this quarter, but that's fine, given the fact that there may be seasonal weakness. So the weakness that we see, is it seasonal or is it something which is an early sign? I think that's something which we'll have to figure out. Loan growth will kind of come.
Okay, disbursements were weak for Poonawalla FinCorp. I'm just reading out from the notes of companies that have reported the pre-quarter numbers. Bajaj Finance looks strong. Even L&T's retail finance disbursals are up 32.5% YOY, though they are down quarter on quarter. But then, as you point out, it is a soft quarter. But Nischint, let me come directly to your recommendations. I'm a little surprised that you don't have companies like Bajaj Finance in your list. Your best bets are Shriram Finance and Muthoot. I'll come to the home guys in a minute. Why have you not picked up, say, Chola or Bajaj and preferred Shriram, Muthoot, etc.?
No, so Bajaj, we are restricted at the moment. So that's where I think you can see an rating over there. We do, have been covering the stock in the past. Chola, I guess it's just that because of the valuation, you can see that there is not much of a gap between the fair value and the current market price, simply because of the way the stock has rallied. Shriram is in a reasonably well position. Valuations are obviously better than or lower than some of its peers. In terms of growth trajectory, the company has been doing fine. And most importantly, if I look at the buffers on balance sheet in terms of the overall provisioning cover, or what we call as ECL cover, they are far ahead of peers. So to that extent, I think there is a fair amount of buffer that's built in the balance sheet versus the initial expectations of Shriram at the time of merger on growth and profitability. I think the company has done far better. And even on profitability, they seem to be marching ahead.
Okay. Let me quickly come to the home financiers. You like Aavas and Home First. Why not India Shelter? Those numbers also look good. Small company, but it looks good.
Yeah. So we do like India Shelter as well, right? So we do like all the three names.
Okay.
It's just that the other ones are larger, that's all. Yeah.
Oh, okay. All right. And gold financiers?
Yeah, so we have a coverage on Muthoot. So two things are happening there. One, gold prices have been, sort of on a roll, and that kind of directly helps Muthoot. And the other thing also is that, some of these gold financiers are gaining market share from other NBFCs, or for that matter, even banks probably are less aggressive than what they were earlier. So, it's going to be a combination of probably market share gains plus strong gold prices, which will drive, strong loan growth for Muthoot. Again, in terms of margins or realizations, Muthoot kind of had some reversals last year because of loans that they sold to ARCs. And I think as those loans kind of get redeemed, we'll probably see some realization benefits as well. Generally, in a strong wicket, the big concern on gold loans was that there was too much of competition and they are losing market share. I guess that kind of a concern is now slowly and steadily receding. And gold prices have also been reasonably strong recently. RBI was a little slow in giving licenses for opening new branches to gold loan companies, which has, I think, also started to change. So that's where I think, Muthoot seems to be in a sweet spot, right?
Oh, yes, yeah. I think IIFL's problems could well be Muthoot's gains, for all you know. Nischint, what is your... you pointed out that you will look out for any stress in unsecured loans and MFIs because we hear anecdotal evidence. Which are the companies you would avoid because of this?
So, microfinance companies, so we don't really cover any of the microfinance companies, in that sense. So it's already not in our coverage. Most of the companies or a host of companies that we cover do have unsecured loans in small pockets. And I think we'll try to get a sense on their commentary in terms of how they're approaching them. Having said that, unsecured in Chola or Shriram is a very small proportion. So it's not something which is alarming. But nevertheless, I think their strategy in terms of how they are looking at it, how they what are the trends that they are seeing over there is something we'll watch out for.
Okay, I'll just come back to them if possible, if time permits. Do you also cover the capital market companies, the AMCs and people like KFin and CAMS? Is that also under your coverage?
No, that's another colleague of mine who covers it.
Okay. But I believe you all have a positive coverage on the AMCs and on KFin and CAMS. Obviously, that's very obvious from the way in which capital market activity has been up and about in the past 6 months, or definitely 3 months. Let me ask you about margins. We've heard banks complain about the high cost of deposits. That should logically affect NBFCs as well. Will there be pressure on margins?
See, the point is, most of the rate transmission is already got reflected in the borrowings cost of NBFCs. So on a sequential basis, what we are really building in is nothing more than 10 basis points of rise in borrowings cost. Incremental cost of funding for most of these NBFCs has been stable for the last 2 or 3 quarters. So incrementally, do we see that bank lending cost for NBFCs going up? The answer is no. So most of the transmission has already happened. Yes, what NBFCs are consciously doing is they are adding new sources of funds. So they are kind of looking at, foreign borrowings or mutual funds, etc. Even if that comes at a slightly higher cost, they may be okay to do it, given the fact that it's giving them a more diversified borrowing space. So that's where you could probably see a little bit of an inch off of funding cost. But broadly, it looks like funding cost is now more or less stabilized on a sequential basis.
Well, right now, Reserve Bank has not shown any inclination to increase, say, risk weight or any other negative on capital market exposure or on, lending to the stock market. But the way in which the authorities in general, SEBI, RBI and the government are going against F&O volumes and other equity market surges, which are the companies you would put on your watch list?
None of the ones that we cover are, if you look at any of these, larger companies, they are mostly focused on vehicles, business loans. Okay. You've got specialized home loans companies. So none of them are,
you would have things like IIFL. Won't those be exposed to, won't they have high capital market exposure?
So we don't cover IIFL, but my understanding is that they don't really have large capital market exposure. See, capital market exposure is a much smaller part of the overall system now, right, as compared to some of the other asset classes. So, even if some companies are doing it, it's much smaller proportion. So, I don't
it may not affect that. Yeah, I take your point. And even IIFL is more a wealth manager and not perhaps lending to, margin funding, etc. Point taken. Overall, are you all positive on NBFCs, your best picks?
Yes, so the general view is yes, positive, but we obviously, acknowledge the fact that stocks have run up a lot. So the upsides are much lower now than what they were probably let's say a quarter back. As you kind of highlighted or summarized, we are essentially, Shriram, Muthoot are the best bets for us, and Awas and Home First essentially on the affordable side.
All right, we'll leave it at that. Nischint, always a pleasure speaking with you. Thank you very much. So Nischint is not quite Nischint on all the NBFCs. He will worry about what the commentary will be on stressed loans, especially in the MFI space. With that, we wind up on this edition of Bazaar. Thanks for watching. Chartbuster Sky.
Best time is ahead of them.
With July, there are a few wedding dates, but they are much lower compared to last year. So people are buying. But overall, with the gold prices that have gone up by almost 20% in the last 2-3 months, I think that volumes are taking a hit and consumers are just waiting and watching that how does the price behave. So this is overall what we are seeing at the consumer end. So if you really look at the diamond sales, it has also been a little under pressure. The Q1 has not seen so much of a diamond sale. So the growth has been very limited in the first quarter of the financial year.
You've had your 6 MLCs now go to the Congress party. What is really what is really happening? Because Revant Reddy himself and the Congress party was against this. They've mentioned this in their Nyaya Patra. Rahul Gandhi is going to town speaking about the protection of the constitution.
Well, Revant Reddy in fact is on record saying कि अगर कोई आदमी दल बदलता है MLA बनने के बाद तो उसको पत्थरों से कत्ल करो, पत्थर से मार के कत्ल करो. तो अभी पता नहीं कौन पत्थर मारेगा, किसकी कत्ल होगी. बट एक बात तो साफ है, जो अपने आप को संविधान के संरक्षक मानते हैं, जैसे राहुल गांधी जी, he keeps flaunting the constitution, is also desecrating the same constitution with impunity. So the whole country needs to know the hollowness of Congress and its claims. The whole country also needs to understand the double standards and hypocrisy of the Congress party and Rahul Gandhi. That's why we are in Delhi, because the people who claim to be the saviors of constitution, who keep flaunting the constitution, cannot be violating and exploiting it and insulting it. So therefore we are exploring all options, including knocking on the doors of Supreme Court, going also to the President of India, to the Election Commission, to the Lok Sabha Speaker, Raj Sabha Chairman, and knocking on the doors of all constitutional bodies, so that pressure is built in Congress not to mess with the constitution.
The job of the management is to navigate through all kinds of headwinds. As in the past several years, I remain cautiously optimistic about the guidance that we have given. And the guidance that we have given is a 10% growth in the top line over last year, with or without G20. And we think we are on track.
RVNL surges as it wins a near 200 crore order coming in from metro stations of Nagpur. 6 elevated stations is what they will construct.
Mahindra is the top loser on the Nifty, trading with losses of over 5% after it cuts prices of its XU7 700 model by 10%. Auto sales have also been under pressure for the month of June.
There's a big block deal in Mankind Pharma sees about 1% equity worth nearly 800 crore rupees change hands. An affiliate of the Capital Group is likely to have sold stake.
MQ Pharmaceuticals and Bansal Wires, both of them see a strong debut on Street, listing with gains of around 30 to around 35%. Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangalam Malu, and a bit of a rarity today actually. After a while, all the top indices that you see, well, all of them are trading in the red. When one would have said, we told you so, but actually many of them have been telling us so for a while right now. However, we have down close to around 200 points on the Nifty. The Nifty Bank is down 350 points, actually is doing a relative outperformance. But your portfolio will not be feeling too good because of the broader markets. The small cap and the mid cap indices, both of them are seeing exaggerated cuts in today's session.
Absolutely, Nigel. Yesterday there was a record high and there were a couple of red flags already. But then again, those red flags have been there for a while. One was just waiting. The question is whether we see support from earlier levels of close around 24,150, 24,200 or not. Because as the market moved higher, the put writers continued to move higher as well. So those would have immediately unwound their positions as we speak right now at the low point of trade for all the frontline indices, and we are seeing some cuts in a lot of these index-heavy names as well. So all of them should come up for you as we speak. We have something like an HDFC Bank not particularly doing too well, and the realty stocks are losing as well. PSU stocks and the metals index, all of them actually lower in today's trading session. Let's see where we go from here. The advanced decline, like Nigel said earlier, 2,000 stocks in the red for about 340 stocks in the green. The lines are as far and wide as they can be, with the red line much above the green line right now, wide. There was an opening positivity, thereafter there was a crisscross and a big up move for the red line, that is. But Nigel, you're looking at GSW Steel for its production data that came in?
Well, that's right. It was par for the course, actually, Mangalam. There was a bit of a decline. If you look at the consolidated sales, which should come up for you in the screen, consolidated would be the India operations as well as the US and the European operations. So out there was a bit of a decline that we saw. On the India business itself, I think we'll get those graphics on the screen at some point of time. On the India business as well, on a year-on-year basis, it was down by close to around 1% odd, came in at around 6.12 million tons. And as that play tells you, the street really focuses on the domestic sales. Now, but there was a bit of a shutdown that we saw, and that was a maintenance shutdown, which the street was aware of as well. So that explains why the volumes are a little bit lower in terms of production. Also, they've gone and given up their utilization levels at around 87% odd. What works for JSW Steel is, since they've been adding capacities, next couple of years, you'll see volume growth out there. However, since we're in a monsoon season, pricing is a little bit weak, and that's on expected lines. In monsoons, you can't get a price increase that comes about. So that's why the stock is down close to 1%, but the entire market is down more than 1%. So I guess, stock not really reacting to those numbers, but reacting to sentiment.
Absolutely. Let's talk about Delta Corp as well. That's the one that I'm watching out for. First quarter typically not very strong seasonally, and to add to that, this quarter was marked by a couple of things that happened as well. The first important thing was that, this is also the first quarter from the last September to now where we had the higher GST coming in. So that was impacting their performance. Add to that, there were elections, so there was restriction of movement, etc. And heat wave, severe heat wave that impacted tourism itself in general. And that's something that, Puneet Chhatwal said to us on CNBC-TV18 yesterday as well. Add to all of this, there was additional weakness in the online skill gaming business. So the company had to provide for higher customer incentives that led to net revenue for the company itself. So revenue overall from last year to now declined by 30%. And because this is, a big decline in the revenue, that had an even bigger decline in their EBITDA. 68% cut is what we saw. So the margins compressed from about 37% to about 17% itself. And as a result of which, the net profit was down 70% as well. Casino business, that showed a revenue decline of 25%. EBIT was down by almost 60%. Online gaming, this is net of incentives, actually declined by 90%. So just 2.5 crores versus 23 crores is, what the company reported in terms of revenue. And the EBIT loss also increased from 8 crore to about 18 crore. Hospitality, we spoke about tourism not doing too well. That was down 17% on a reported revenue basis as well. So all these factors not particularly working for Delta. And if you look at the last few trading sessions as well, there was a bit of an up move that we saw in the stock. So that is something that is coming undone. But in an otherwise weak market, KDDL is the one which is actually mildly higher because of the buyback announcement that came by. So let's see where that goes. But that's about individual stocks. Let's get in Soni Patnaik joining in from JM Financial Services for a quick technical check on the market. Soni, typically we ask you how high is this going to go? But today after a 230, 240 point low on the Nifty right now, we're on the verge of breaking that 24,200 mark as well. The question is, where does support come in now?
Good morning, Mangalam. Good morning, Nigel. Thank you for having me on the show. So I think the correction was quite expected because, both the indices had actually touched an overbought zone and there was a expectation that it can correct. The correction for Nifty, any level below 24,200, you can see 24,000 levels also getting tested. Now, that is going to be the area where it will test itself because it's a very crucial support for the entire series. If 24,000 support breaks, you can see the correction getting extended towards 23,700 plus levels. I think that is where level one can actually watch out for. But of course, from current level from 24,400, 24,450 is going to act as a resistance. There's a lot of significant call writing that can be seen in today's option chain metrics. So I think that's the level to watch out for. Intraday basis 24,200. Any break below that, it's going to take us straight to 24,000. Similarly, for Bank Nifty, 52,000 is playing a very crucial support level. If that level were to break for Bank Nifty, we can see the profit booking taking place up to 51,000, 50,800 levels for Bank Nifty. So I think that is very crucial. I think Bank Nifty also has started showing the first signs of correction and it can test 51,000 support.
Okay, got it. Soni, what about individual stocks? What are you looking at?
Nigel, so it would be both on the sell side for the day. One we can see in ABB futures, which is looking quite weak. It has given a fresh breakdown below 8,600. There's a lot of put open interest unwinding seen at lower levels. So the support is getting weaker. So in futures, one can sell ABB keeping a stop loss of 86.30 and a target of 8,400, 83.50 levels can be seen. The other idea to balance out the approach would be on a buy. However, the buy comes in Asian Paints, but it's a buy on dips. So anywhere towards 28.80, 28.70 is the level one can buy on dips for Asian Paints, keeping a stop loss of 28.40 and a target of 29.30, 29.50 can be seen.
All right, Soni, thank you for joining in and giving us your calls on the stock as well as the indices. 51,000 on the Nifty Bank, 24,000 on the Nifty are levels that can be tested in the kind of ferocity that we're seeing selling with. In fact, from the time we started the show to now, there has been a 30-40 point decline in the Nifty already. The Nifty has broken that 24,000 mark as well. So it is a big gash that we're seeing, and the mid-cap index down about 2% as well. In a market like this, what are the kind of ideas for profit there are? We have our colleagues from Money Control Pro joining in and telling you that. We have with us Lekha Badlani Jamnani joining in.
So the stock pick is Apollo Hospitals, which has been an underperformer amongst its healthcare peers in the past 1 year. Now much of this could be attributed to the concerns attached to its Apollo 24/7 business. Now, the company was expecting its healthcare vertical to achieve EBITDA break-even in Q4 FY24. However, it broke even in Q3 itself. The offline pharmacy business remains steady and profitable. Also, the management is confident about achieving EBITDA break-even in its Apollo 24/7 digital business in the next 6 to 8 quarters. Additionally, the merger of KeyMed with its healthcare business is likely to make it one of the largest integrated healthcare providers. Now, the management has guided for the combined entity to clock a revenue of 25,000 crore by FY27 with an operating margin of 7 to 8%. For FY25, the management is guiding for 15% revenue growth and 25% EBITDA margin for its hospital business. Its expansion plans for FY25 to 27 is well in place to drive growth in the coming years. The diagnostic business also continues to scale up well as its revenue and EBITDA grew 20% and 76% in FY24. Now, Apollo Hospitals has the potential to leverage its presence across the entire spectrum of hospitals, pharmacy and diagnostic segment. Furthermore, improving pharmacy business appears as a turnaround opportunity for the stock. Trading at a reasonable valuation of 23x FY26 estimated EV/EBITDA, we recommend accumulating the stock for the long term.
All right, with that, we'll take a short break, come back on the other side, get you more on the markets. There has been a deep gash. We'll get you some more market opinion and stock-specific action as you come back after this short break. Well, we are seeing some bigger cuts now in some of these names. So pull up something like, an Atul Auto, which had seen a big move earlier, now currently at a lower level. Park Hotels, all the hotel stocks have been doing well. Now some profit taking for this one. Castrol India, that's the other one that saw a big move earlier. That's also at the low point of trade. So we are seeing some gashes in a few names. And then from, the F&O pack, we have GAIL, which is at the low point. We have NCC, which is at the low point. NBCC, Bandhan Bank. There are a lot of stocks which are now actually testing the lows of the session, with the Nifty, sitting with a cut of almost 1% and nearly twice of that for the mid-cap index at 2% as well. But amidst this, there are some brokerage ideas that have come by as well. Supreme Industries is one on which Jefferies has written. Sudarshan joins in to tell us more about that. Sudarshan.
So the stock is trading lower as like overall market condition is not favorable for any of the, most of the stocks are trading with cuts today. But Jefferies maintains buy call on the stock and it has raised target price to more than rupees 6,700 from rupees 5,390 per share. And the rationale that company gives, Jefferies gives, in April-May volumes have grown by 22% year-on-year despite a high base, and sales have grown by 12% impacted by PVC volatility, and focus on value-added sales might aid the margin for the company, and SKU breadth and distribution depth act as key modes for share gains that company might have in the next few quarters. And Jefferies believes it will be a good play on housing, capex and agri. It estimates 25% plus EPS CAGR over FY 24-27.
Thanks a lot for that, Sudarshan. Well, let's focus on the other stock, MGL. That was the one that was buzzing in trade today. The company has hiked the CNG prices by around 1 rupee 50 paise per kg and around 1 rupee per SCM for PNG. The company says the price hike was due to the shortfall in domestic gas allocation. Earlier today, we spoke to Mr. Shingal, the MD at the company. Let's listen in to excerpts of that conversation.
We were getting APM gas, which is at $6.50. From 82%, it has come down to 68%. So there is substantial reduction in the APM gas, which is the domestically available cheap gas. And the LNG prices were earlier down, but now it has started increasing again. So we are constrained to increase 1.5 rupees in the CNG prices. However, still we are the cheapest in the country in terms of CNG prices and PNG prices. The per bike consumption, the cylinder capacity is only 2 kg. So to see any significant increase in our volumes, the number of bikes should be very huge. So it will take some time. Maybe next year we will get some volume, maybe 2-3%, and afterwards it can increase furthermore. But definitely it will take some time to, one, that people are getting used to the new bike, although it is definitely much more advantageous in terms of running cost. So double the numbers will give us maybe 10% volume, but then the numbers of bikes should be around 7-8 lakhs, which will take a substantial period to come to that number in Mumbai or in our geographical areas. The budget is passed and what is included in the budget or not. The other point which we are hearing is maybe the gas can be included in GST, because if that so happens, then excise duty cut will not be required. It will be one tax regime for the gas segment itself.
Okay, all right. Let's focus on a couple of stocks that are buzzing around. RVNL, in the first hour of trade, the volumes were massive. And I think even though the markets are at the low point of the day, that's still holding with a gain of around 5.5%. Vivek joins us to fill us in with a quick analysis on the news flow. Vivek?
Well, that's right. So railway stocks, despite the market fall, yesterday, of course, they did correct from the day's high yesterday. But today, once again, especially RBNL on the back of some positive news flow, is again trading in the green despite the kind of weakness that we see in the overall markets. So what is the development that's happened? Some time ago, there were talks that India, will be participating in going ahead and developing a Middle East railway corridor. And there has been some progress made on that front. So what has RBNL done? As of this point of time, it's still an MOU. That's a memorandum of understanding. RVNL has signed an MOU with Tatweer Middle East and Africa LLC. So what will be RVNL's role in this particular MOU? They will be using RVNL's expertise in the railway sector for joint design and execution of various rail-based work in the MENA region as well as other European countries. Some more positive news are coming in for RVNL. This is for the Nagpur Metro in Maharashtra. The company has received the letter of award for construction of 6 elevated metro stations. This particular order size is in excess of 187 crore. The time period for this particular construction is around 30 months.
All right, Vivek, thanks a lot for that. So that's about RVNL. The last couple of trading sessions, we saw some profits coming off, but one order win and, the railway train starts once again up 6% now in an otherwise wobbly market. But what a good listing for, Bansal Wire in this environment, Nigel.
Well, that's right, Mangalam. Bansal Wires, there's a fair bit of interest on that particular counter, and it's opened up with a gain of around 30% odd. Let's run you through a few details. If you analyze last year's EPS, they did an EPS of closure around a little over 6 rupees per share. Now, given that it's listed at a premium of close to around 35-40% odd, the stock is trading at around 50 to around 55 times its trailing earnings. However, the earnings will improve going ahead. Why is that? Because remember, this this wasn't an OFS, it was a fresh issue, which means all the money comes back to the company. So how does that help? Let's get some points up on the screen as well. How does it help? Well, it'll be debt-free post the IPO. That's point number one, so they'll save on some interest cost. There'll be operating leverage that will play out as well, because the capacity is going to be going up from around 2.5 lakh to around 6 lakh tons. And the third factor is the specialty steel vertical. Well, that's going to be commissioned, which will aid their margin profile. The margins for the company of the last year was close to around 6%. So from there, we should see some bit of an improvement. Put all these three factors together, and these are takeaways from what the management told us. The street is excited about the way ahead. Interest savings, operating leverage playing out, and they are changing their mix as well with higher focus on a higher margin segment.
Right, so that's about the new listing. Just keep an eye on a couple of consumer stocks which are actually doing well. We have Pidilite, which is still holding in the green in today's trading session. We have Raymond, which is doing well. Raymond's up 3%. Remember, there are a couple of brokerage notes. The management, decoded the whole strategy of the company, the demerged entities, etc. So there were some, details given out by the company. That's doing well. Honasa continues to do well, likely to grow the fastest in the consumer space in the first quarter. And Kaya, that's the one that's been on a tear over the last few trading sessions. This month itself, it's up 45%. And this is one of those stocks where every dip is bought into. Briefly, when the market fell, we saw the stock move into the red. But from there itself, there's been a recovery of almost 2.5–3%. So that's something we'll watch out for as well. But we spoke to Puneet Chhatwal of Indian Hotels yesterday, and did he speak about growth in this year? Yes, 10% is what they're looking at. And also, the average room rate may perhaps come lower from current levels, largely because they will add 10 to 12 Ginger hotels every month. So on a blended basis, it may be visible out there, but 10% overall revenue growth with increase in occupancy and holding on to the average room rates of the key brands with increased rates coming in from Ginger hotels is something that the company's strategy is. Let's hear him out.
The job of the management is to navigate through all kinds of headwinds. As in the past several years, I remain cautiously optimistic about the guidance that we have given. And the guidance that we have given is a 10% growth in the top line over last year with or without G20. We think we are on track. For the year, we did 33% almost. So I think anything north of 30 for the full year is a very good industry-leading margin on a global front. We should not forget we have also hotels in US and London and Cape Town, and it's not just a domestic. On the domestic front, on standalone, we are north of 40. And I think that's a very respectable and a very high margin for the kind of business that we are in. And we have been very confident in giving this guidance, and we stand by that. And if the growth of Ginger starts in the way we have been thinking it should, like adding at least 10 to 12 a hotel a month just with the Ginger brand, then it starts diluting the overall average achieved rate, because a Ginger brand would do like 4,000 or 5,000 rupees as an average rate, whereas Taj would do north of 15,000.
Well, time to slip into a short break. When we come back, we continue to focus on the markets, which are struggling as of now. We'll focus on select stocks as well. Don't go anywhere.
Dr. Saneen, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning, to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going...
Welcome back. While there is nervousness across the board, some stocks are having some days out in the sun. We have something like a Tips Industries, which has seen a decent move, has suddenly spiked to the high point of trade. But by and large, the number of gainers are far and few in between. We have a lot of stocks which are actually currently at the low point of trade. Garden Reach Builders, for one, down around 4% as well. But let's take note of all that's taking place on Wall Street and the global cues that may affect our markets as well. Speaking to the Senate Banking Committee as part of his semi-annual address to the Congress Federal Reserve, Chair Jerome Powell cautioned that keeping rates elevated for too long could actually stunt economic growth. So let's hear that out first.
The Federal Reserve remains squarely focused on our dual mandate to promote maximum employment and stable prices for the benefit of the American people. Over the past 2 years, the economy has made considerable progress toward the Fed's 2% inflation goal, and labor market conditions have cooled while remaining strong. Reflecting these developments, the risks to achieving our employment and inflation goals are coming into better balance. Recent indicators suggest that the U.S. economy continues to expand at a solid pace. Gross domestic product growth appears to have moderated in the first half of this year, following impressive strength in the second half of last year. Private domestic demand remains robust, however, with slower but still solid increases in consumer spending. We have also seen moderate growth in capital spending and a pickup in residential investment so far this year. Inflation has eased notably over the past couple of years, but remains above the Federal Open Market Committee's longer-run goal of 2%. After a lack of progress toward our 2% inflation objective in the early part of this year, the most recent monthly readings have shown modest further progress. And more good data would strengthen our confidence that inflation is moving sustainably toward 2%. We know that reducing policy restraint too soon or too much could stall or even reverse the progress that we've seen on inflation. At the same time, in light of the progress we've made both in lowering inflation and in cooling the labor market over the past 2 years, elevated inflation is not the only risk we face. Reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering adjustments to the target range for the federal funds rate, the committee will continue its practice of carefully assessing incoming data and their implications for the evolving outlook, the balance of risks, and the appropriate path of monetary policy.
All right. Well, let's also listen to Rishi Sharma, the chairman of Rockefeller International, talking about the U.S. economy and also his views on investing in the emerging markets, including India.
I think that the U.S. economy is slowing. This is going to be the second quarter in a row where growth comes in well below 2%. And I think that this trend is now seeming that it's going to go on. I won't be surprised if the U.S. economy comes to a virtual standstill in the next 6 months or so as the stimulus, which has, I think, kept growth artificially high, dries up. And I suspect that's what's going on just now. Investors currently are in the grip of the AI mania. So as long as that goes on, everything else gets shaded. So it's very interesting comparison that the US is outperforming, but it's almost all due to the mega cap tech stocks, particularly stocks like NVIDIA. But on an equal weighted basis, if you look at the US market or the European markets or emerging markets, the performance is pretty close. So I think that is just that one sector that's keeping the US outperformance going at this stage. Yeah, I think that India is a completely unique case on its own. As you know, it's the most expensive market in the world today. It's the one country, I would say, which is having a true bull market, even compared to the US, as you point out. that the breadth of the Indian bull market is what you typically see in bull markets, that everything is rising there, with mid to small caps doing better than even the large caps. But I will not say that geopolitics is a major risk for investing in emerging markets as such. I think that emerging markets at this stage outside of India, which is obviously very expensive, are extremely cheap. But this is the central issue which we are dealing with in the US, and I think we're dealing with global investing.
All right, so that's some interesting opinion coming in from Ruchi Sharma, saying that India is the most expensive market in the world right now. Not so much today, down about 1%, but we take it as it comes. With that, we're wrapping up on this edition of Chartbusters. You stay tuned to CNBC TV18 Trading Hour. The team of Trading Hour will take the market action forward after this short break.
Out through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Hormuz Fatakia, and markets are down. The benchmark indices are down nearly 1%. The Nifty is hovering around 24,200. It didn't start off like this. The GIFT Nifty was suggesting a flat start. In fact, in the opening tick, the Nifty went on to hit a new record high, 24,461 or 66 thereabout. It was a new high. But from there, things just started unraveling, and now you're staring at a near 2% cut on the mid-cap index. The small-cap index, the Nifty small-cap index, is down 1.8%, the biggest intraday fall that we've seen in the last 2 months. Look at the advanced decline ratio, one stock gaining for nearly 6 stocks in the red. And just about 30 minutes back when I was checking, there were only 3 Nifty stocks which were in the green. All the others were in the red. The picture keeps changing. But the point is that, it's across the board, there is that big sell-off that you're seeing. The culprits are on your screen. So M&M, it doesn't have much of a weightage, but M&M as a stock price is down 7%. So it's causing the biggest drag on the index. Reliance Industries, ICICI Bank are under pressure. The gainers list is very, very faint. It's just, Maruti Suzuki on both ends of the Nifty screen. You've got a Maruti, the top Nifty gainer, and on the way down, you've got M&M, the top loser. It's that battle brewing, right? SUV versus hybrid, who's going to win? And right now, just over the last 2 days, it appears SUV, after that relentless, hectic run over the last 2 years, is going to take a bit of a backseat while hybrid catches up.
The law of averages, right? After a relentless move, as you just mentioned, there's some bit of cool-off was anticipated, and it's reflecting in the stock price as well. Now, M&M is the top gainer on the Nifty in 2024. Even after today's 7% drop, the stock is still up 60%. So far this year, and I was looking at the valuations as well. At FY26 PE, it's trading at around 25.2 times. The historical average is 15.9 times. So the run-up has caused this valuation concern as well, right? So some bit of profit booking coming in for M&M as well. But the broader markets are seeing a bit of a pain in today's session. The mid-cap index, the small-cap index, both of them seeing some sharp corrections as well. 84 stocks on the mid-cap, the small-cap index are trading with losses as we speak, while on the small-cap, the number is even worse. That's 88 stocks on the small-cap index that are trading with losses in today's session. What is bucking the trend, though, is RVNL. It made a record high yesterday. It saw a very sharp correction. It ended at the lowest point of the day from there. And today, it has recovered most of those losses. Now trading 7.5% higher, almost at 580 is RVNL. What is unraveling, though, in today's session, besides most of the other broader market names, are the shipbuilders, the Masgao docks, the Cochin shipyards, all of these stocks who have seen a 70-80% rally in the last 1 month. They are seeing a bit of a correction today. They opened higher, and then they have cooled off. Cochin Shipyard, Garden Reach, both 2.5% lower. Masgao Dock also trading with losses of around 3%. Mankind Pharma is doing well for itself. Pharma is doing well in general, I guess. Mankind Pharma is up 3% after the block deal. What's doing well as well is CAMS. CAMS is a stock that is up 6% as well in today's trading session. So, bit of a pain in the broader markets as well, but there is plenty of stock-specific action as well.
I think maybe there's also some concern in the run-up to the earnings, because there was a Morgan Stanley note which is saying that the earnings may moderate because of the high base. So, they're still very constructive about the India growth story. Today's Citi, in that earnings call that we put out in the morning on Bazaar, they're saying that they're expecting a 2% Nifty headline earnings growth. And for the Citi universe, for all the stocks that they cover, a flattish year-on-year earnings growth. The drag is going to be energy. But if you strip that out also, X of energy, the Nifty growth is only expected to be about 8% on a year-on-year basis. And India has been, the whole of last year, we had a double-digit kind of an earnings growth. So maybe earnings may moderate, and that too could be a bit of a concern on the sidelines. But in fact, that's the cue, right? Because Q1 FY25 earnings are upon us. We've already seen Delta report their numbers yesterday. Today, you've got Tata Elxsi, but really, it starts with TCS tomorrow, which reports their numbers closer to about 3:45, 4 p.m. And then you've got that press conference at 5:30. So to talk us about what to expect this time, we have with us Dr. Bino Pathiparampil, Head of Research at Elara Securities, and he also looks at pharma very, very closely. Dr. Bino, thank you very much for joining in. First, give us the headline picture. What are you expecting at Elara going into the Q1 earnings season?
Good morning. Like you just mentioned, we do expect some moderation in earnings. For the entire coverage universe, we are expecting only 5% odd top line growth and a flat earnings growth. But that is severely impacted because of a significant YOY decline in earnings in the oil and gas space, where we are going to see significant contraction in GRM as well as retail margin YOY. If we exclude the energy sector, we are looking at still a double-digit earnings growth in the low teen to mid-teen range, which still appears healthy. Of course, it is a slowdown from the kind of growth we saw last year in FY24. But you also have to keep in mind that in FY24, we had some tailwinds in terms of softening commodity costs, softening freight costs, etc., which were sort of recovery from the disruptions that we saw during the COVID lockdown. So such tailwinds are now behind us. We in FY25 Our expectation is that the overall corporate profit growth will trend more towards the long-term sustainable rates. And Q1 is possibly a window that shows us towards in that direction. So we are expecting, excluding energy, earnings growth in the low double digits in Q1.
Dr. Beena, good morning. Thank you so much for joining in. What I wanted to ask you is the scope for earnings downgrades a lot higher this time around compared to upgrades? Because considering the moves that most of these broader market names have seen, or even the index names, some of them for that matter, the expectations are just way too high, and that leaves absolutely zero room for error, I guess.
The expectations are high in terms of the valuation or the PE multiple, but in terms of actual estimates, consensus estimates out there, I don't see a lot of growth. I don't see any room for big earnings downgrades in most of the sectors. There could be select pockets where we see that. But across the board, a significant cut in projected earnings, I don't see coming through in the quarter. But of course, having said that, valuations are high, PE multiples are high. If the commentary of the companies do not sound so bullish going forward in terms of growth over the next few quarters, as well as going into FY26, we may see some valuation correction going forward. But an across the board earnings disappointment is not in the picture.
Okay, so no big earnings disappointment. Dr. Beena, just to move aside from the earnings picture just for a brief bit, can you tell us what you've picked up on what's happening with M&M and Maruti? What are your analysts saying about the kind of moves that we've seen? And it's a very, very sharp decline in M&M. Are we really concerned that a 4-month celebratory 10% discount is sparking off severe demand concerns in the SUV space?
So what we believe is this is a temporary reaction to the regulatory announcements that happened over the last couple of days around taxes with respect to hybrid vehicles. And in response to that, players like M&M had to announce some discounts. But this is a temporary blip. Our view is that this is not fundamentally changing the outlook on the auto industry. While the growth rates, which were very high in FY24, will come down in FY25, we do not see this as a turning point in terms of fortunes for the sector or M&M as a stock.
Okay, so M&M will continue to lead. M&M, Tata Motors, they've been the big star performers in the auto pack, given the strength in their SUV portfolio. Do you think that's likely to sustain?
They need not necessarily lead, but we believe that the overall momentum in the auto stocks, including Maruti, including M&M, Tata Motors, will continue. We will see continued growth, although at a softer rate than FY24.
Now, Dr. Beena, I wanted to get to a sector that you track very closely, and that is pharma. And you've mentioned in your note that pharma companies are likely to report a 26% earnings growth year on year, and that is benefiting from a stable and improved pricing environment in the US. Is that pricing environment likely to sustain going forward? Do you see this as an inflection point for a lot of these pharma companies who have had pricing pressure for a prolonged period in the US market? And do you expect one or two particular companies to be a bigger beneficiary compared to the rest of the pack?
Our view is that the US pricing scenario will continue to improve. We have seen that improving over the last 1 to 2 years, and we believe that will continue. Possibly over a couple of years, we may see a scenario where we will talk about price increases in the US market rather than price erosion. So to that extent, we are very positive on the US generic space and all the companies which have significant leverage to that. Most of the large cap pharma companies, including Zydus Life, Sun Pharma, Dr. Reddy's, Aurobindo, Lupin, Dr. Reddy's, all of them have exposure and will benefit from this phenomenon. And we are broadly positive on the entire space. Within that, our top picks at current levels would be Zydus Life Sciences and Dr. Reddy's.
Okay, and you've got a sell call on Divi's Laboratory too in the pharmaceutical pack. What about technology? We've seen a run-up in the tech stocks in the last 1 month. Are they pricing in any potential good news? Is there a risk of disappointment because now the expectation has been, the bar has been raised with the kind of run-up that we've seen?
I do not think the 1Q numbers would significantly matter for the stocks because the run-up has happened and the stock is pricing in a recovery of demand, possibly 2 to 3 quarters down the line. So the commentary of the management would be more important than the actual numbers in Q1. Having said that, I believe that the kind of big improvement in growth rates that the market is looking for may not come through. Our internal estimate is that possibly a recovery of growth from the current 1 to 2% to a 5 to 6% level is already in the price. For any meaningful surprise and a meaningful upside in the stock prices, the outlook for growth should come in above 6% levels, possibly closer to the 8, 9, 10% levels, which we have seen historically. That as of now looks as a tough ask, except for select counters here and there. So as of now, I would wait and watch on the IT sector stocks.
All right, Dr. Bino, pleasure having you as always. Thanks a lot for joining in and sharing with us your expectations ahead of the first quarter earnings season, which has already begun, but begins for the Nifty 50 companies tomorrow evening. Time for a short break here on Trading Hour. Up next, we discuss what's buzzing in the commodity space. Manisha Gupta joins in on the other side.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Great way to celebrate our own 25th year with new milestones being achieved on Dalal Street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter-century of excellence.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as uninvesting.
Back with us here on Trading Hour and shifting focus to the commodity space now. Manisha Gupta joins in, and today we are focusing on crude oil prices as well as the Indo-Russian energy ties. Manisha, over to you.
Well, there's a bit of an uptick coming in for the crude oil prices after prices fell 3% in last 3 trading sessions. Hurricane Beryl has made a landfall in Texas as Category 1 hurricane. It has spared most of the oil facilities there. They are restarting back, and that is a premium that seems to be getting off the prices. Also, the Canadian wildfires seem to be now lessening, and that has not impacted oil supplies there. The markets also are looking at a prospect of ceasefire between Israel and Hamas, and that geopolitical premium also seems to be easing off. Having said that, the markets will wait for the US crude inventories that come in today. Last week was a very sharp decline in crude, gasoline and distillate stocks. So if the numbers come in on the weaker side yet again, that could be supportive for prices. Apart from that, a very interesting report from EIA which says that come 2025 and you would be looking at lesser supplies and higher demand. So a condition or a situation of deficit could be emerging. That is what as numbers or developing story that the markets will keep an eye on. But even more interesting is the Indian PM meeting the Russian president, and there is a conversation about strengthening energy ties with Russia. India is the largest buyer of discounted Russian crude oil, and there is now conversation and energy cooperation in the field of nuclear energy, oil, refining, petrochemicals, energy, infrastructure, technology and development as well. So there has been a statement to that effect suggesting that as of now the bilateral trade between India and Russia stands at 65 billion, but come 2030 the target is for $100 billion, and much of that would clearly be on the energy side. So this is another factor that the street will keep an eye on.
Thank you very much for that. A little bit of a recovery is coming through in the mid-cap index. The mid-cap index is still down 800 points, but at the session lows, it was down more than 1,300 points. And a few of the PSUs, PFC, IRCON, are now back in the green after that little bit of a bounce that we've seen in the last 30 minutes. Industars too has managed to recover a tad bit from the day's low. We'll get into a break on that note. We'll come back, discuss market technicals. Mitesh Thakkar joins in on the other side with his top trading bet. Stay tuned.
It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
I think it is not euphoria, it is like a stampede in the market. You know, even here in Ahmedabad, whoever I am meeting who is not at all related to stock market and from different walk of life, different field, business-wise, career-wise, and everybody is talking about stock market only, that they want to trade, they want to make quick money, and they want to, break their FD, and they want to, somebody was telling me yesterday only that he's working in some IT firm and all, and he want to quit and again, join stock market and all. So I think that this situation is...
Welcome back. At least the markets have stopped falling. In the first 1 hour of trade, after opening at record highs, we saw the markets continuously fall till about 10:30, 10:40. But after that, we've stopped falling. So the fall has been arrested, and that's a good sign. The Nifty is consolidating for the last half an hour, 45 minutes, around 24,200. Autos continue to be the top sectoral loser. The Nifty Auto Index down 2.2%. We've talked about the cuts, the deep cuts seen on M&M, 6.5% down. Hero MotoCorp, Tata Motors under pressure. But even Maruti, pull up the intraday chart of Maruti. After opening up with strength, Maruti slipped considerably from the day's high and is now just up close to about 0.6%. So some profit booking has kicked in over there. Metals is the other sector where you are seeing pressure. The Nifty Metal Index down nearly 2%, with Tata Steel, Hindalco seeing losses of about 2%, and IT2 a bit on the back foot, profit booking. HCL Tech 2.5% down. TCS is under pressure, 1.3% gone on that, ahead of numbers tomorrow. But talking about results, Delta Corp is slumping after reporting its Q1 numbers. It's also a seasonally weak quarter. KDDL is the other stock which is on our radar after the company has announced some buyback. Mangalam joins in with details on these two stocks. Mangalam.
So we start with Delta Corp, where it is a seasonally weak quarter, and in addition to that, there were a couple of things that happened during the first quarter as well. One, this is also the first time year on year where the company is facing the higher GST impact. This was also the quarter where there was elections and the heat wave impacted casino operations. Add to that, there was weakness in their online skill gaming business as well. The company had to increase their customer incentives too. So net of that, the revenues were largely, eroded, down almost 88%. So on an overall basis, the company reported a 30% drop in revenues year on year. The company reported revenues of 180 crores. And when you have a 30% drop in revenue, obviously with higher costs, etc., you have to, see a bigger hit on the EBITDA, and that's exactly what happened. Margins compressed from 37% to 17%, a 68% drop in both EBITDA as well as the net profit. And the segments were, weak across the board. 25% drop in casino revenue, leading to a 60% drop in their operating profit out there. Online gaming, net of incentives, down 88% in terms of revenue, EBIT loss widening out there as well. And hospitality too saw a cut of almost 17%, and that's reflecting in the downtick that we're seeing in the stock price as well. On the other hand, in an otherwise wobbly market, one stock which is holding in the green is KDDL, and this after the board has announced buyback details. So it's a near 90 crore buyback. With the company is doing almost 2% of the equity, which will be bought back at a tender on a tender offer at a price of 3,700 rupees. Now remember, this is a near 12% premium to yesterday's close. But the reason why the stock is not zooming ahead is because at 2%, the acceptance ratio would be extremely low. More so because the promoter's stake is at 50%, and they are included in the buyback. So as a result of which, for retail, there would be 1% acceptance ratio itself. KDDL additionally is also the promoter of Ethos Limited, the seller of luxury watches, holds about 3,100 crore worth stake in the company. KDDL's own market cap is close to around 4,200 crore rupees. So if you give a holding company discount, maybe that's another play that the street is looking at for KDDL.
Interesting, Mangalam. Thanks a lot for both of these updates. The first ever buyback that KDDL has announced, and the stock trading with gains of just around 1.5%, but can't say the same for Delta Corp. A forgettable day for them after their results, 5% lower on that stock as well. But moving on, then HG Infra is the other stock in focus after brokerage MK reinitiated coverage on the stock with a buy recommendation, and Vivek is here to give us more details. Vivek, what does MK have to say in this?
Well, that's right. So, this particular company, HG Infra, MK, after a while has gone ahead and reinitiated coverage on the stock. They have a buy rating with a target price of close to 2,100 rupees a share. What they're saying is that this particular company has seen a makeover from being just a small subcontractor into a diversified infra play. They're saying that the company has best-in-class operating as well as financial metrics, which has actually gone ahead and supported swift, stress-free growth, as per what MK has to say. The road segment, for all of the road developers, actually saw an order slowdown in FY24. This was number one in the run-up to the election, and also number two, there were significant restrictions that were placed, from both MORTH as well as NHAI. So what's actually happened is that what do they see going forward as far as the entire road sector is concerned? They're saying that the government's new Vision India at 2047 plan in the post-election cycle, they believe will go ahead and accelerate road award tendering. They're saying that HG Infra has given quite a significantly strong guidance. 12,000 crore order inflows they are seeing in FY25. versus just around 4,500 crores of order inflow that the company saw in FY24. Along with that, the railway sector expansion, within that particular segment, they're seeing focus on high-speed corridors, freight and station upgrade. They believe that can go ahead and support mid-term growth. Solar and water are other segments where they believe that the company, which has order book of almost 1,300 crore from the PM Kusum scheme, is also one particular area of growth. As far as revenue and PAT growth is concerned, they are seeing a CAGR of 21 to 22% from FY24 to FY27. Total order book, mind you, at the end of FY24 was around 8,485 crore.
Thank you very much for that. Mitesh is now with us for a quick technical check at 11:30. Mitesh, are you surprised the way the markets behaved today after yesterday's up move of nearly 0.5%? You got a sense that there was some upside momentum in the markets, and today you've had this big fall, at least in the first half of the trading session. What explains it, and what's the near-term texture?
Good morning, Nima. In fact, I was calling for a decline because, while we made a new high, one, the bank Nifty did not participate on the upside. Two, I think the indicators were suggesting that, the Nifty was extremely overbought and they had already started turning south, and there was lack of momentum and lack of thrust on the upside. So I think this is okay. The first level on the Nifty has been tested around 24,180-200 zone. In case you break below this, look for 24,000 to be tested. The worry is the back Nifty still. It's already entered into a negative or a sell mode on the hourly and the 2-hourly chart, which means that this could be a slightly prolonged decline. While there is some support at 52,000, I expect eventually the bank Nifty could head to 51,500, 51,400 zone. So I think next few days will be choppy and corrective, and exiting on bounce back would be a good idea for people who are stuck in index at higher levels.
What about specific stocks then, Mitesh? Are you advising someone to buy the dip here because the dips are few and far in between, or are there some stocks where you're recommending to book profits?
So I have one buy and one sell almost. Jindal Steel is breaking down. So that's a sell with a stop at about levels of 1,016, 17, and look for a target of 950, 942 on the 940 on the downside. But what is doing good is ICICI Pru Life. That's making a fresh high. Buy here with a stop at 646 for targets of 675.
Thank you very much for that. Get into a short break. On the other side, we'll put the spotlight on MGL, M&M and Supreme Industries and find out why they're buzzing in trade.
Personally, I may be wrong because I have been proven wrong many times in the past. But I think this will not end well. So SEBI should take very strict action to curb this kind of frenzy in the market or stampede in the market. Now the pricing power is coming with all these telecom service providers like Jio has already increased the rates, and Bharti also has followed the suit. And same is with Vodafone. Numbers 15 players has shrunk down to only 3 players, and BSNL is 25% players, so 3.5 or whatever you call it. So, and one thing is the for sure. Earlier we used to talk about in India roti kapda or makan. So now this is roti kapda makan or mobile. As I always say that when my driver keeps 2 mobile, I keep only 1 mobile, but my driver keeps 2 mobile. So how can you go wrong in all these things in this telecom? I think now since they have started increasing the rate, and so I think best time is ahead of them.
With July, there are a few wedding dates, but they are much lower compared to last year. So people are buying. But overall, with the gold prices that have gone up by almost 20% in the last 2-3 months, I think that volumes are taking a hit and consumers are just waiting and watching that how does the price behave. So this is overall what we are seeing at the consumer end. So if you really look at the diamond sales, it has also been a little under pressure. The Q1 has not seen so much of a diamond sale. So the growth has been very limited in the first quarter of the financial year.
You've had your 6 MLCs now go to the Congress party. What is really happening? Because Revanth Reddy himself and the Congress party was against this. They've mentioned this in their Nyaya Patra. Rahul Gandhi is going to town speaking about the protection of the constitution.
Well, Revanth Reddy in fact is on record saying कि अगर कोई आदमी दल बदलता है MLA बनने के बाद तो उसको पत्थरों से कत्ल करो, पत्थर से मार के कत्ल करो.
Welcome back. On to some more buzzing stocks in today's trade, and MGL is one of them, and that is because the company has hiked the CNG prices by 1.5 rupees a kg and PNG prices by 1 rupee per SCM. Now, the company has said that the price hike was due because of the shortfall in domestic gas allocations. Now, earlier we spoke to Ashu Singhal, the managing director of the company, and listen into excerpts from that conversation.
We were getting APM gas, which is at $6.50. From 82%, it has come down to 68%. So there is substantial reduction in the APM gas, which is the domestically available cheap gas. And the LNG prices were earlier down, but now it has started increasing again. So we are constrained to increase 1.5 rupees in the CNG prices. However, still we are the cheapest in the country in terms of CNG prices and PNG prices. So the per bike consumption, the cylinder capacity is only 2 kg. So to see any significant increase in our volumes, the number of bikes should be very huge. So it will take some time. Maybe next year we will get some volume, maybe 2-3%, and afterwards it can increase furthermore. But definitely it will take some time to, that people are getting used to the new bike, although it is definitely much more advantageous in terms of running cost. So double the numbers will give us maybe 10% volume, but then the numbers of bikes should be around 7-8 lakhs, which will take a substantial period to come to that number in Mumbai or in our geographical areas. The budget is passed and what is included in the budget or not. The other point which we are hearing is maybe the gas can be included in GST, because if that so happens, then excise duty cut will not be required. It will be one tax regime for the gas segment itself.
It's time to focus now on the auto sector then, and leading SUV makers Mahindra Group and Tata Motors have cut SUV prices. Parikshit is joining in with more details. Parikshit, what has been the rationale behind this price cut?
Well, the Mahindra Group has been saying that they have been indicating since February that they would want the waiting periods for some of their top models of XUV700 to come down. They want to also make the car more accessible to customers across the country. So this is a plan that was in the works for the past few months. They don't want people to think that this is a 25 or 26 lakh rupee car. They want to bring down the prices so that more people can buy it in the market. The same thing goes for Tata Motors, saying that they've hit a milestone with sales of the Safari and the Harrier, and they now want to offer a discount bonanza to customers for a 1-month limited period only. But as far as the price reductions go, price reductions and discounts are not just there in these two leading SUV makers across the board. Be it Maruti Suzuki, which is offering discounts anywhere from the Alto K10 from 35,000 to all the way to 3.3 lakhs for the Jimny, be it Renault, be it MG Motor, Hyundai India, they're all offering discounts in the month of July. Multiple factors for that. One, it is being linked to what has happened in Uttar Pradesh because of the exemption from road tax on hybrid vehicles. UP is a big car market. Every month, about 2.6 lakh cars are sold in Uttar Pradesh. But car dealers and also car makers say this has nothing to do with UP because UP is just one market in the country. Apart from that, Q2 is generally a lean season because of the heat wave we're coming from, the rainfall and monsoons right now, the sowing season that is on currently. All of this put together makes sure that the demand is slightly muted at this period. Even Society of Indian Automobile Manufacturers had predicted that going forward, we might see slow growth or muted demand in the passenger vehicle segment. There is also very high inventory that we are coming out from. In fact, the Federation of Automobile Dealers had recently warned that there is 60,000 crore worth of inventory already in the system. Inventory is as high as 60 to 67 days. And there is an urgent need for correction. There are 6.5 lakh cars with an average ticket size of rupees 9 lakhs each, which are unsold in the system right now. So there is a need to clear all of that inventory as well. another reason that we're getting from a lot of automotive dealers and experts is that when there was a lot of pent-up demand in the system and there were supply constraints, the car makers were enjoying a very premium selling point. And now, when there is no longer any kind of supply constraint, it is a buyer's market, there is a need to make the prices more competitive. So some dealers say that discounts are good, it will correct the inventory, it's good going into the festive season. Others feel that the discounts could be even higher because we won't see that kind of strong demand that we saw for 2 to 3 years after COVID-19. So lots developing over here, and we could see more discounts. The two leading SUV makers announced discounts, announced price cuts within hours of each other. But this currently right now is an industry-wide phenomenon, not just limited to 1 or 2 companies.
Pariksha, thank you very much for that. And that number of 60,000 crore of inventory is really telling. Thank you very much for that. As we count down to the budget, the Road Ministry is expected to get a higher allocation versus the interim budget and also compared to last year's budget. Danish is now joining in with the details. Danish.
Well, Modi Government 3.0 is all set to present its first budget on 23rd July. In the upcoming budget, the government is likely to increase its focus on the road, transport and highway sector. Sources told CNBC-TV18 that the overall budget allocation for the Ministry of Road, Transport and Highways is likely to be around ₹3 lakh crore, which is much higher than the interim and previous budgets. They will be more focused on rapid transformation of the road and highways network across the country. The government is likely to set a target of 3,000 kilometers for new highway construction, and there could be enhanced focus on increasing digitization in the sector. Ministry's digitization targets will likely include announcement and full plan on GPS-based tolling and usage of AI for finding flaws in current roads and highways. There will be enhanced focus on use of future technologies. The government is expected to make announcement on future energy-compatible highways, that is, highways for EVs, LNG, etc. Sources told CNBC-TV18 that there could be announcements on specific capex for further developing the charging infrastructure and EV battery recycling facilities. The announcement will be made keeping in mind Vision 2047, as by 2047, government aims to build a highway network of 50,000 kilometers.
Danish, thanks a lot for that update. From roads, we move to real estate, and the market there is experiencing growth and an increase in demand as well. Now, Ashiana Housing, based in Delhi, intends to have more presence in Navi Mumbai, the Delhi NCR and Bengaluru. Talking to my colleague Timsi Jaipuria, Ankur Gupta, the Joint Managing Director of Ashiana Housing, says that the government should focus and come out with policies for services like assisted or senior living and caregiving.
Very excited about what's happening with us and the industry at a whole, and specifically our senior living business that's growing. And now we're looking at 3 more locations. One is Panvel, second is Bangalore, and in the Delhi NCR, looking at either Noida side or Gurgaon side to add another project. So we're hoping to close those 3. Plus, we're looking at projects in Jaipur, Jamshedpur, and Bhiwadi, and very excited about what's going to happen, and hopefully trying to add about 25 to 30 lakh square feet this year in land.
25 to 30 lakh square feet is what you're looking to add in this particular year itself. Where will the funds come from?
Luckily, because of the sales being very good in the last few years, we've mostly internal accruals, and we also have a tie-up with IFC. So between the two, we should be able to fund these projects.
Any number that you would like to give it to me, that how much of investment would this mean? What sort of delivery plans are there?
So right now I don't have a number, but I see that we should be able to do it within internal accruals, and most of these projects will come under joint ventures. So the investments will be lower in the beginning, but a lot of the investments will go into the development side and the pre-development side. And the future is looking good, and we have lots of projects launch planned, and specifically again in the senior living, where next month we're going to be launching our 9th senior living in Chennai. And this is going to be one of the upmarket. We're calling it a sophisticated senior living because it's going to be for the upmarket clientele for the first time. So very excited about what the future holds for us.
When you talk about sales, you said sales are very good. What are the current sales volumes, and what are the expectations by the end of this fiscal?
So this last year we had a booking value of 1,798 crores, almost 1,800 crores, and we're expecting this year to about touch 2,000 crores. So God willing, we'll do that.
you're looking at 2,000 crore worth rupees of sales. How are they going to be for, say, next 3 to 4 years? Because you're talking about senior living, you're talking about new plans to be added, new projects to be added. When we talk about new projects, obviously they'll not take off immediately. You are going to first close the land parcels and then construct it. So what sort of a sales are you looking from these 6 to 9 places that you're talking about in the coming years?
So overall, right now the sales volume which we have planned is in the 6 to 8,000 crores in the next 3 to 5 years, and we see that happening.
When we talk about budget is around the corner. Any wish list that you have for the finance minister to consider, especially when it comes to housing side? A lot has been talked about on affordable housing. A lot has been talked about how capital gains tax should be realigned so that people invest more in housing. What are your budget wish list?
I think one of the biggest concerns which we're not talking enough about is seniors. And I think as India is aging, and we'll see population changing from being young to older, and as we live longer, I think the biggest challenge we will face in the future is senior citizens. And one of the things I think we should be looking at is the insurance piece of the pie, and we should make sure that not just medical side but a lot of services side gets covered. So if you look west, even services like assisted living is covered through insurances, and I think one of the things we should be looking at in the future is IRDA covering these kinds of insurances for our seniors.
When we talk about insurance, you talk about more and more services getting added, more and more policies expanding towards seniors. Anything specific that you've written to IRDAI about that they should consider?
So I think the caregiving services is a very important services, and that lasts a little longer. And I think parts of the caregiving services should be covered within the cost of IRDAI.
When we talk about insurance, there's a buzz that government should consider reduction of GST on health insurance, on overall insurance products that we have, life insurance. Is that on your wish list too?
Obviously, we always talk about GST reductions. I'm not. It's always like at a balance. We need to make sure that we balance the government budget at the same time making it affordable for the population at large. So we need to figure that out. And insurance is an area which is going to be more and more critical as healthcare cost goes up. So I think GST on insurance is something I would suggest to reduce. But obviously, balancing the budget is more critical.
Ashiana Housing there in conversation with Timsi Jaipuria. Time for a short break. Up next, we put the spotlight on MCure Pharma's stellar listing and find out why Supreme Industries is buzzing in today's session. Stay tuned, back on the other side.
कौन पत्थर मारेगा, किसकी कत्ल होगी, बट एक बात तो साफ है, जो अपने आप को संविधान के संरक्षक मानते हैं, जैसे Rahul Gandhi ji, who keeps flaunting the constitution, is also desecrating the same constitution with impunity. So the whole country needs to know the hollowness of Congress and its claims. The whole country also needs to understand the double standards and hypocrisy of the Congress party and Rahul Gandhi. That's why we are in Delhi. Because the people who claim to be the saviors of constitution, who keep flaunting the constitution, cannot be violating and exploiting it and insulting it. So therefore, we are exploring all options, including knocking on the doors of Supreme Court, going also to the President of India, to the Election Commission, to the Lok Sabha Speaker, Raj Sabha Chairman, and knocking on the doors of all constitutional bodies, so that pressure is built in Congress not to, mess with the Constitution.
The job of the management is to navigate through all kinds of headwinds. As in the past several years, I remain cautiously optimistic about the guidance that we have given. And the guidance that we have given is a 10% growth in the top line over last year, with or without G20. And we think we are on track.
Welcome back. The Nifty, which was at 24,200, has picked up a bit, 24,250 now. So about a 40-50 point recovery is what you can see. LTI Mindtree in the large cap space has started moving up, and HDFC Life is also now back in the green. In fact, LIC is another stock you should pull up. LIC is also up nearly about 2%. Remember, in the latest insurance updates that we got for the life insurers, both HDFC Life and LIC stood out. And India Cement is a stock which is seeing some nice price and volume action in the last few minutes. And railways as a pocket, as an entire theme, have rebounded. So RVNL, we spoke about it because of the order win, but even the others like IRFC, RailTel, Ircon are now back in the green. RITES is under pressure, but the rest of the pack is now back in the green. But let's talk about Supreme Industries. That's buzzing in trade. There was a Jefferies note on it. Sudarshan joins in for more. Sudarshan.
So Jefferies maintains buy call on the stock, and target is raised to 6,700 from rupees 5,390 per share, indicating an upside of almost 15% from current levels. And what does Jefferies say? It says in the first 2 months of this fiscal, volumes for the company have grown by 22% despite a high base of last year, and sales have grown by 12% impacted by PVC volatility. Jefferies say if companies focus on value-added sales can aid the margin in FY25, and SKU breadth and distribution depth act are key modes for share gains. Company will be a good play on housing, capex and agri, and Jefferies estimates 25% plus EPS CAGR over FY24-27 for Supreme Industries.
Thanks a lot for that, Sudarshan. Supreme Industries, a positive note, but the stock in line with the broader trend in the market today, trading 1.5% lower. But pharmaceutical company Emcure Pharma has listed on the last read today at a premium of over 30% to its issue price. Ekta is joining in with the details. Ekta, tell us more.
Well, yes, Emcure Pharma has seen a good listing in today's trading session. It is listed at a strong premium. The issue price at the top end was of the price band was around 1,008 odd rupees. Now, the subscription itself was very strong. It was totally around 67.87 times. They've also raised around 582 crores from 48 anchor investors. So you can see that the trends itself for this particular IPO were quite strong. Fresh issue of 800 crores and there was an OFS of around 1,151 crores. They're looking at 600 crores in terms of debt reduction from the IPO proceeds. So the debt will come down to around 900 crores from 1,500 crores. 48% of their sales does come from India, 52% from international markets. They have around 13 manufacturing facilities. Margins in FY24 were a bit of a problem. So it came in at around 18 or 19 odd percent versus 20% on a year-on-year basis. And the company has said that the last 18 to 24 months, the company has been impacted by around 1,000 medical reps, being added on, and that's really impacted margins. And if you look at it compared to peers as well, the margins have been sluggish as compared to most of the listed peers, that even in case of valuations. Valuation-wise, it is way more expensive if you just compare it on an FY24 trailing PE basis for all of the companies. So it'll be important to see what the earnings trajectory looks like for the company going forward. They have indicated that the second wave of capex, which they have around 1,200 crores for 4 facilities, will get commissioned and will aid margins. They also expect debt reduction to aid the profitability because there will be an interest cost reduction as well. The other key point to watch out for is Sanofi and Emcure had entered into a distribution pact for their cardiac drugs. So whether or not that will be a huge upside for them in the domestic business, they can get around 48% of sales from the domestic business. And chronic segment of drugs will also be a big growth driver for them. They currently get around 45% sales from there.
Thank you very much for that. Even the other listing of the day, Bansal Wires is holding on tightly to all its listing day pop, 35% up on Bansal Wires. The stock is now at 345 and 89 rupee premium. I was just reading what Nigel had indicated, that some of the reasons from our last interaction, and we had spoken to the company in trading hour, they're saying that going ahead, the earnings will improve because one, the company will be debt-free. They're raising 745 crore. A bulk of that will go in paring down their debt. There will be some capacity expansion, and also they're getting into specialty steel, which has higher margins. So that's another added kicker. But good opening for both those stocks. Get into a break. We'll come back with more. Stay tuned.
Welcome back. There's a bit of a recovery coming in from the lows of the day for the Nifty. Around 24,140 was the low is what the index made. And since then, it's been a pretty good recovery actually. 100 points higher from the lows of the day, but still 0.6% lower on the index, 150 points down as we speak. But the broader markets continue to face pressure because all sectoral indices are trading with losses as we speak. The 76 stocks on the small cap index that are trading with losses. There's been a recovery there as well because at the start of the show there were 89 stocks on the small cap index that were trading with losses, but still 1% lower for the small cap index. And when we speak of the mid cap index, that is also seeing around 83 stocks that are trading with losses as we speak. The recovery has been seen in stocks like RVNL that has extended its gains now, Mankind Pharma, but a cool off has come off in stocks like CAMS. We started off the show, the stock was trading around 6% higher. At the start of the trading session, the stock was 9% higher. Now the stock is trading with gains of around 4%. But what's not doing well in today's session are stocks like Bharat Dynamics, the entire defense space, the high-flying defense stocks, all of them surging anywhere between 90 to 100% already this year. And they are seeing a bit of a cool-off in today's session. That too has recovered from the lows of the day, though, Bharat Dynamics, but still 3.5% lower. The top loser on the mid-cap index is IEX, and that stock now is trading with losses of around 5% as we speak, and 173 now on IEX, 5.5% lower there as well. Bandhan Bank is the other loser in today's session. Remember, this the interim CEO takes charge today, and that continues to remain an overhang on the stock now as to who would be the new MD and CEO at the lender. Remember, the interim CEO is only in for a period of 3 months, so we'll see more developments coming in there on Bandhan Bank, 4% lower on 193. But as we wrap up on this edition of Trading Hour, earlier today we spoke to Conrad Saldana, the Managing Director and Portfolio Manager at Neuberger Berman, on his take on the markets and the upcoming budget. From me, Rima, and the team that put this show together, thank you so much for watching.
We've already looked, fairly behind the headline names historically, and you had an opportunity in March when the market sold off. Right now, obviously, we're at a point where the multiples are not as conducive as they have been. But if you take a longer-term view, maybe it's the time correction on these names that might be utopian, and maybe it's an inflation print that brings a little bit of jitters into the market that gives you that opportunity. But I think we've already looked at these interesting mid-cap opportunities, knowing the promoters well, the businesses that we believe are going to execute. It's the same names. I think the budget is definitely what has people excited, right? Given that the market's already done well into this, barring the wobbles after the election results. Definitely there could be, I shouldn't say definitely, but there potentially is the possibility of some more stimulus. But I think the government has been pretty measured in terms of keeping an eye on the fiscal. So I do not see a major trend that's going to change that.
Dr. Sunil, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning, to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and, of course, on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as
Stocks see a sharp sell-off across the board as concerns over valuations kick in. Autos and metals are the biggest losers.
SUV major M&M skids after it cuts prices of its XUV 700. Tata Motors too trims tabs for Safari and Harrier, even as Maruti and others offer discounts. Analysts see this as a sign of slowing demand and increased competition.
Ashu Singhal, the MD of Mahanagar Gas, tells CNBC-TV18 he's heard of a likely cut in excise duty on gas, even as the industry bats for bringing gas under GST. He points to a sharp reduction in Indian gas allocation as a pressure point.
Emcure Pharma lists at a hefty premium of over 30% to its offer price of 1,008 rupees per share, while Bansal Wire 2 lists at a near 38% premium to its offer price of rupees 256 per share. Both offers very heavily oversubscribed. Good afternoon. You're watching us here on Halftime Report. I'm Manglam Malu. With me, Ekta Batra. If you've just tuned into the markets, you would see there's a near 160-point decline on the Nifty, 400 points off the Nifty Bank. So there is a fair amount of weakness across the board. But over the last couple of hours, while there has been a decline from the highs, there has also been a strong recovery from the lows, bringing Nifty back into its range of 24,150 to around 24,500 itself. So as you can see, we opened up at a record high. From there itself, there was a big cash that we saw, a lot of profit taking, and then thereafter, there has been some semblance of recovery from the lows itself. The broader markets still under pressure, 1,800 stocks in the red for about 500 in the green. Hi, Ekta.
Hi, Manglam. Yes, absolutely. You know, the Bank Nifty, for example, has recovered around 80-odd points from the day's low. The Bank Nifty low was around 52,077.9. And otherwise, we have the mid-cap index, which has recovered a cool 800 points from the day's low, along with the Nifty, which is off around 122 points from the day's low as well. So there has been a recovery. Let's see if it can get bought into further and whether there is any kind of further upside that we can see for the markets. Remember that there's a lot of cues which are lined up in the next couple of days. We have Jerome Powell, the Fed chair, who will be giving a testimony to Congress today as well. And then we have the US CPI data to reckon with. So there will be a lot of cues from the global front as well as from the Indian front, because we have earnings such as TCS as well as the CPI data, which the markets will be reacting to. But nonetheless, as of now, let's see whether there's further amount of recovery. Currently, the Nifty is still down around 161 odd points. But we have a lot of stocks to cover. Let's start with one of the big stocks in focus today. MGL is in focus today as the company has hiked CNG prices by 1.5 rupees per kg for CNG and 1 rupee per SCM for PNG. In our Insight Edge segment on Halftime Report, Sonal is here with more details on this story. Sonal.
Thank you so much for that. Well, a number of things that have happened for the CNG industry. First up, of course, Mahanagar Gas has gone ahead and increased prices both for the CNG and the PNG segment, to which the management said it is for a number of reasons. First, the domestic gas allocation, the APM allocation, which happens to priority sector like CGD, it has reduced substantially in last 1 year. It has come down to 68% versus 82% earlier. Remember, during COVID, it was as high as 120% as well. So that sharp cut means that they will not be getting cheaper gas, because of which they have to go ahead and buy imported gas.